let somebody know if my mic is working. It should be working. This week we're doing this test on this ORB strategy opening range breakout. Why did it post 2 links? Let me delete one of these. Some reason when I tried starting to stream this morning, it didn't work. It didn't start. So I had to restart it. Let me test my mic here. See what we're getting. All right, so it looks like we're working here. We need to leave our volume up. We'll get out the charting. I did not get a chance to run through Dow last night. Dow and Russell, we still have to work through. So, we're testing this ORB strategy. And here's our rules. Basically, we're only taking the trades from 9 a.m. to noon. Again, we're going to take all signals. And as long as we have a positive trade, we don't need to trade afternoon. So that's really how this was back tested, putting 3 contracts on, closing out 2, closing out that partial, letting a runner run. Now, I already said at the beginning of the week that during the back test, it was like a 5-week period. Nasdaq typically only goes to the profit target 1, and that's it. So knowing that, you have to decide if you're going to leave a runner on or not. I chose to leave runners on, and but you may not want to. You may just want to go trade to profit target 1 and be done for the day, and that's okay as well. But a lot of times that's all it goes, and then later on it might break out and run. But typically Nasdaq's going to go back and forth. It'll break out in like short spurts and go for a little bit and then pull back and possibly even reverse. So that being said, that's how we're trading it this week. Trading it just as it was back tested. So there's the charts from yesterday, and you could see that Dow or S&P up here in the top left, back and forth. Same with Nasdaq. We were waiting on that news yesterday in the afternoon. So with FOMC, the Fed funds rate. So it was more sideways in the morning. So we were still able to profit on the day. Not a whole lot, and overall we're in still in a small loss. So it has not been a good week for this at all, this strategy, because I'm trading it the same exact way that we were that it was run through in the back test. Okay, so just not really the greatest day so far on this. Something I did do last night though is I did go through and run this through complete test on all 4 indices, okay? So what I did was I went back through the charting and looked at what level was closed past, okay? So you'll see that Nasdaq on April 16th, it actually closed past level 5, okay? Which means that if we were trailing our stop 1 level back, our runner got closed out at level 4. So that was a good day on the runners. Okay, so as we're looking at this data, we want to see, how often did it break out and run? Okay, did it not do that? So 2 things I'm looking at here. In the first column here, and I went ahead and colored them. I did have them all colored green, and I thought, no, I want to color them because it'll make it easier to scroll down and see what's profiting more. So if it's in color dark green, it is closed past level 4, 5, or 6. Level 3 is also colored green. So that's what we're looking for. We're looking in column 1 here, which is our, what level it closed past. We're looking for green. I want to see which one of these has the most green in that area, okay, in that column, because that's going to be where it closed past level 3, which means our stop loss, we would have moved to level 2, okay? Now, it might have got up to level 4. This one here that closed past level 5, it just means it it didn't close past level 6, right? It closed past level 5. It may have come close to touching level 6, but I'm not using that data because I move my stop based on where it's closed past. So when price goes up and a candle closes past level 5, I would have been trailing my stop one level back. So I'd have moved my stop from level 3 to level 4 and then got stopped out because that's the max level it hit was this level 5. Okay. So my stop would have been stopped out at level 4, my runner. So great trade on that. This one over here on ES, it closed past level 4. So our stop would have been closed at level 3. So the runners do work. So looking at this data, I want to look and see what's the most green, you know, where it's closed past level 3, which means our stop would have been stopped out level 2. So we're looking at this to see, I want to see in this column, which one has the most green. And then in this column, how the quantity of trades, I want to see who has the most trades where it's one trade for the day. That's it. So that's what I'm doing to analyze the data, one trade for the day. Of course, we don't want to see a lot of these. We don't want to see a lot of check marks in here in the redemption period, because if we do, that means that we had to sit around and trade later in the day. Whether that trade breakout came at 1 o'clock, 2 o'clock, 3 o'clock, you know, I'm not marking those times. It just means that we were not able to take a positive trade. All that means is, again, that checkbox means that we had to take a trade in the afternoon because we took no winning trades in the morning. So trading in the afternoon is fully optional if you want to trade and try and make back some of that loss, or because we look at some of these, where's it good? Well, here. So this one here went to profit target 1, okay, April 15th, but it was 3 trades. It did it in, which means that the first 2 were losses. So we had to trade on the third trade even to make a positive trade, which means 3 trades. That afternoon trade during the redemption period only covered one of those losses, or either most of it, all of it, but it only went to profit target 1. So it probably just barely covered 1 losing trade. So that was a still losing day for us. So I haven't sorted through and looked, but if I sort like this, you'll see that, let me scroll up here. That is up. That we only had, and I'm looking at 2 things. One, we're looking at the PT3 and above is green, but then if it hit profit target 2, that was good as well, because we pulled our runner to profit level 1. We would have done that. We would have moved and it hit close past profit level 2. We would have pulled our stop to profit level 1. So that's still a great day, right? No, our runner made some, okay, but 1 trade. And we're looking at that. We're looking at 1 trade. So this looks decent. You know, it gets down to, what is it? We got 1 column up here. So if we come down to this row, we're at 11. So 10 days, 10 days out of the month where it hit, and it's mixed up on the days right now because I've got it sorted. So 10 days on the month that Nasdaq at least went to profit level 2 or beyond. A lot of days were 1 trade. You know, what is it? 1, 2, 3 days out of the 10, we only had to take 1 trade to get there, and then only 1 redemption period trade. So that's how I'm looking at it. We'll come over to S&P and we'll do the same thing. You sort the column from Z to A, and then we've got only 6 trades, because that's 7. So we have 6 trades that hit, oh, no, sorry. We're going to here. So we did have 11 trades. So we had 11 trades that profited. Profit target 2 was closed past, so we would have moved our stop to 1 on those. But look how many days where it went to 4, closed past level 4, more than Nasdaq. That's what I said. So S&P looks like it played out better, all right, which I love to see. So as far as sorting the data right now, S&P had 11 trades that were profit target 2 and above at close pass, which means, again, we closed our runners on these 2s. We closed our runner at profit target 1. On profit target 3 right here was closed pass. Our stop would have been stopped out at profit target 2. And then when it closed past level 4, we would have moved our stop to profit level 3. So our runners on these top 4 trades closed out at profit target 3. Okay, so that's what the leaving the runners on. If we would have just closed everything out at profit target 1, we wouldn't have caught that extra on the runners. Okay, so that's what's for. So looking at these two so far, S&P looks the best because we've got more green trades, about the same overall profit target 2 and above. And then we have, 3 trades, 3 days where we had to take 2 trades to get there. Okay, which to me means what? That we either took 1 loss and then 1 winning trade. So 1 loss, but then a winning trade that closed past profit target 4. So that would have been a profitable day. Or it could have been 2 profitable trades. Because remember, if it breaks out and goes to profit level 1, we would close out part of that trade and then move our stop. And then if it pulls back into the zone, breaks out again, then we're going to get in a second trade. So this 2 trades could have been 2 positive, 2 negative. I didn't go through and mark all that. Let me reset it. And then we look at Dow, and we'll sort Dow. So Dow, if you look, it only went to number 10 down here, which is 9 days. So only 9 days, so less days where it hit and closed past profit target 2 or better, and then less in the green. Less days where it hit profit level 3 or 4, because those are the 2 that I have coloring green. Well, and then 5 and 6, of course. But hit profit level 3 or better. Let's see, this was 3. So only 4 days where it hit profit level 3 or better. Okay, and those were all 1 trade. So 1 trade each of these days that went to profit level 3 or 4 and closed past. Okay, so that's decent Dow, but not as good as Nasdaq, and then not as good as S&P. So far off this data, S&P is in the lead. Then we have Nasdaq, and then we're looking at Dow, and then we're going to look at Russell here. So this is what I worked on last night, just going through and pulling in this data so I can pull the rest. So we had, 4 trades over here? 5? I can't remember. So we have 5 trades here on Russell hitting profit level 3. So to me, that shows that could it be consistent, okay? If I had 1 trade in all these, if I had 1 trade over here in all of these, because 2 of them were 2 trades. So if I had where it hit profit level 3, closed past profit level 3, I know our runner's getting stopped out at profit level 2, which sounds great. And if I saw 1 trade on every one of these, that would be something I'd look to trade. Because that's consistency, okay? But we had 2 that went to profit target 2. So we only had 3 that you traded 1 trade, and then 2 that you traded 2 trades, which means the first one, again, is either a loss or it hit profit level 1, we closed it out, it pulled back and gave us another signal, and we took another trade. So it could be 2 wins, or it could be a loss and a win. So I want to see more 1s in this second column. But overall, about the same. If we look at this row right here, it hit profit level 2 and up, okay, about the same amount of days as the others. So that's really not a big surprise that profit level 2 and up was hit the same amount of days on Russell out of the testing period right now as the others, because they move in sync. So it shouldn't surprise. But what we're looking at is they do move in sync. However, you'll get some of them that they're hitting their profit level 4 versus another's profit level 3, okay? So good data on it so far. So far, S&P's in the lead, what I would consider to be in the lead on this. And then it would be Nasdaq, and then it would be Dow, and then Russell. Russell would be last to trade. So again, we're looking at not only what goes the distance, how many times we have max green here, where we got dark green, which the dark green's when it gets to profit level 4, 5, and 6, okay? So that's what we're looking for. Which one maxes out where we're getting dark green? That's what we want to look for. And then we're also going to consider, profit target 2 and 3, but where's our maximum benefit going to be? All right. I think that's it for the slide. So we'll get in, or the screen. Yeah. So let's go into screen share. We're at 7 minutes till, so we're starting to print that box. Just give me a minute to get things set up on here. All right, so we're printing the box. Now, a couple things we're going to look at is, one, I do have a red zone up here, which would be a 4-hour zone. We got our yellow zone down here, which would be a 4-hour zone. So we do have two of those to consider. You know, when I started this week, of course, I took everything off the charts. But yesterday we looked at the higher time frame. So you should always be aware of the higher time frames, glance out at the 4-hour and see what's going on, okay? So there's our trades for the week on Nasdaq. And then I do have the the power trade indicator on. So those are our buy and sell signals off that is what those are for. So we're looking at the two zones that it's between. So what do you think is going to happen today? What's already started? So for me, of course, it's already, sorry, I had a meeting this morning with and breakfast with an investor. So they're texting me on some stuff. So we're already seeing that push down, right? So we're already experiencing bearish momentum on this 4-hour candle, okay? 1 hour, 15-minute, you're seeing that downward push. If we had a trend line up here going up this move, basically, of course, it was broken. This right here is a 1-hour evening star. If you know anything about candle patterns, you know, you got an evening star, which typically means a bearish push. That's what we're coming off of. Go down the 15-minute, you're going to see more waves. This is when you can come in with the trend line. I don't know that I'll leave this on the chart. And that would be your trade line down right now. Trend line, trade line. I just call them trade lines because at the end of my trade, that line's going to come off, okay? And then ultimately go down to the 5 or the 3 to take a trade. So where are we sitting right now? So along with our back testing, and if you guys got questions, just pop them in there. But along with the back testing, I wanted to look at the two time frames. Some people are waiting the first 15 minutes of the U.S. stock market. So it opens at 9:30 a.m. Eastern. There are some people that will sit out the first 15 minutes, and they want to mark the high and the low of the, let me kill these. I don't want my phone going off, so, and I certainly don't need it in airplane mode. That'll wait the first 15 minutes before getting in. They're marking the high and low of 15 minutes. Others that wait the first half hour. So you wait until 10 a.m. Then you'll look for a breakout. I chose to wait till 10 because I had seen too many days where, like this, I don't know if it's going to continue short. It'd be great for those people. So if you're one that got in this morning on the, you sat out the first 15 minutes and you're marking the high and the low, right? We have the high up here, right there. And then your low would have been this candle right here, okay? So if you're waiting and just sitting out the first 15 minutes and looking for the high and the low, well, your high's here, where my high would be, and then your low would be here, because that is the low of the first 15 minutes. And that's why I put this vertical line there. So the vertical lines come up at that 9:45 mark to mark that as a trader. You know that at that time, okay, that some of the traders out there are doing this. They're trading that, let me kill the magnet, but they're looking from that high to low, okay? That's their line, what they're looking at. So right now, to me, it pulled and broke through that, their 15-minute low for the first 15 minutes, but it's pulled back up into that, okay? So that's what they'd be watching is that. Let me do this. We'll color this the mid box because that's yellow, and then I do not want to extend it. So that would be for the 15-minute traders. They're looking for it to break the high or low of the first 15 minutes, okay? It'd help if it let me click on the box here. All right, so you would be in, okay? So we've looked at that the last few days, and there was days where during the first 15 minutes, if you took that breakout and got in, it completely reversed and you would have been stopped out, okay? If you put your stop midway in that first 15-minute box, there's the line in the box. So your stop would be right here if you're using the halfway point, okay? That would be where your stop is. So there's the stop marker if you got in the first 15 minutes. If you're using half the box, half the zone, the high-low. So waiting till 10, we're still waiting for the entry. So for the 15-minute trader, right now it looks okay. You got in short, or you might have waited for a pullback, and you might have pulled the trigger when it, price pulled up to test that low. So right now it looks okay. You got a pullback. We have a red candle. Is that the bounce? Is that going to be the bounce? And is it going to shoot down the rest of the morning? Is it going to break out and go to PT1? Okay. You can kind of project. This would be what it looks like for anyone that took this at the first 15 minutes. There would be your stop. Your entry price would be the low of this candle, the close of that candle. That would be your trade right now. So a 15-minute person waiting on the 15-minute to break out would have already, here's your profit target, which is right there. So that would be the I don't want that. I need the text here. It's giving me the wrong thing. So this would be the trader that is only looking at the first 15 minutes. That is your profit target 1 would be right there. So we'll leave that. Why didn't it pop the text on there? It took the wrong, it gave me the wrong line. So let's move these two. So again, these are marked for the person that took the trade after the first 15 minutes, after a candle closed past the first 15 minutes. You'd be in, your stop would be here, and your take profit would be here, okay? That's the person that got in. So we're not in yet. We're waiting until that 10 o'clock. So we'll leave those on the chart, though, as the 15-minute. And this would be the stop for the 15-minute. I'm just going to put stop 15-minute on it, or 15M. But that's what it stands for. That would be the stop loss that you would have used if you took the trade on the first 15 minutes. So, again, I had just, during the back testing, I had seen too many days where the price broke out, broke past and closed past the first 15 minutes, lower high, only to turn around and stop that person out. So that was part of my data, part of what I had to look at. So as I go back and do that testing, and that's why I have that vertical line that comes on at 9:45, so you guys can see the difference. What's the difference in two? What's the difference in, why are we looking at this? Why are we looking at somebody that waits the first 15 minutes versus somebody that waits the first half hour? Well, again, I want to put all the odds I can in my favor. I want to stack the odds in my favor, as many as I can. So if I see that historically, a lot of times it would break past the first 15-minute low only to turn around, if it would put me in short, only to turn around and stop me out, I don't want to be involved in that. That's not something I want to do. I don't want to start off the day taking my first loss. And again, as I say that every day, we still might get in at a 10 o'clock, as a candle closes above or below the high and low. That still could happen. Our first trade could be a loss. But typically, when they break that, they'll move past. It still could happen. But I had seen historically more times than not, it would pop down. It was just too many times for me to say, well, I don't like that. You know, I didn't count the days, how many days. I just, as I'm looking back, I would see that go, well, I don't want to be involved in that. I don't want to. And we had that happen like twice this week. I don't know if those markers are still on there. It doesn't look like they are. So we're going to sit here and wait for our entry. It's 10:03 now. So I love that it's in the middle of the box. We'll see what happens, make a decision. Always look at your highs and lows. Where our stop is pretty much right at this. You notice how it dropped here and then went sideways. Our stop is right there on those highs. Mid box is right there for this person that took a trade. So we'll see. Is it going to go up? And is this level where the stop is it going to act as resistance again? Okay. Is it going to act as resistance and pull down? Let's look to the left of the chart. If I hold my cursor here on that mid box level where the stop is, well, if you look over to the left, what do we got? We got 3 wicks in there. I forgot to turn my little light on. Jeez, that's bright. So again, where the stop is, where that mid box is for the first 15 minutes, we have lows over here, these wicks. So basically when 9:30 hit, it dropped down, closed below those lows, and then kind of sat under them, pretty much testing this area. So that would be an area of importance that you would mark as a low and high. So we'll mark that level. Is it going to pop up there and just bounce off that and again go short? I don't know, but you need to be aware of the highs and lows. What's happening? We also have a good level right here. And this, to me, looks like it could be a reason for it to maybe not hit PT1, okay? As we look at the highs and lows and how it dropped down and respected this level, price level, popped through it and hung out just above it, putting pressure on that level only to break through, that's a price level of importance, okay? So if you look at that, and I'll take, probably, we can leave that on. We'll see, I don't know what we want to call that, guys. PLI, how's that? Price level of importance. We'll call that a PLI. So if it does come up and close past the high and we get in, that's our first cautionary zone. It may not break back through that PLI, right? And what's it in the way of? It's in the way of it hitting PT1. Okay? So let me move this low. This is our low. For the half-hour traders waiting on that first half hour. So, again, if you got in on the first 15 minutes, not to say that's going to be a losing trade. We don't know yet, right? Your stop would have been here, halfway in the box. And so you're not stopped out yet. You've sat in the negative for a while. If you wait on the pullbacks, so if a candle closes past the low and you wait for a pullback, a better price to get in, then if you're waiting on just price action to get in, then you would have got in on these pullbacks right here, pulled the trigger thinking, okay, it's pulled to test that 15-minute low, and then you would have got in at a better price than here on the pullback. If you're waiting on a red candle to signal, it would have been this one breaking back through the box, and that still would have been a better price entry. So several chances to get in. So right now we have a low, right? That's our opening range low. And typically I would mark that as our low to break. That's the low that needs broken. Okay, this is the low that needs broken for us to say it's making a lower low. Okay. You can pull the charts in even more and look back at these levels, and you're going to see several of them that come in play here. But this was a pause and go. You know, I call it a stop and go, where you'll get a price move. It just stops and hangs out for a little bit, maybe a little one pullback candle there and keeps going. Not to be confused with sideways consolidated movement, just a stop and go. Like over here, this one candle went up, 4 candles or 5 candles green, red candle, and then what, 4 candles green again, three that moved up. So a little stop and go action. So it looks like we may get, we're going to watch and see. What do we got? We got 26 seconds. Right now as it's testing that range low. Okay. So if you did get in on that one candle right there, you are in and out of profit right now as it's fluctuating. If you happen to pull the trigger as price pulled back. So it's, you know, every trader is going to be different how they get their entry. I tested it if we just took the close, because I'm looking at this as can a trader trade this and just trade off of alerts and alarms while they're working? Okay, and if you're working, you want to have an alarm go off when it closes past the low. Okay. I don't have any alarms set up today. Let's see. I'm going to leave that one on. We'll pull that off. It's right now looks like it's getting ready to signal, so I'm not going to worry about setting an alert on here. I need the trade window open. You guys should be able to. I'll work on getting the P&L on there. I want to watch this candle. We got over 2 minutes left. We had our electric company come out yesterday, and they had to shut down power to the house. So my computer was completely shut down. So I had to get everything set back up last night, and I didn't notice that the P&L wasn't showing. So just bear with me. I'm trying to. They're in here. I just can't get one to show. All right, what's going on? They keep resetting on me for some reason. I may have to make a new one. I'll work on that here and there. See, there we go. But where is it? All right, that's the original one. So that's not the one we want. All right, looks like we might be getting a candle close here past. So I know I'm messing with this, but I still gotta. Is that it? I'll make one of these work if this doesn't. All right. There's our candle close, so I need to pop 3 on. I'm not paying attention. We're going to sell 3. All right, so we'll sell 3. We'll pull our stop loss back to the midpoint of our box. Okay. I'll have to change this. I don't know why, but these P&L boxes, I'm always constantly moving these around and resetting them up because for some reason, that's what we want to see on the day. For some reason, they when the computer shuts down, sometimes this studio doesn't start up with everything running on it, and it seems like I'm always losing the P&L boxes. It seems to be something that keeps happening. I don't know why. They like shrink and they lock up, and then I just got to delete them and create a new one. So I actually have 3 of them sitting there because I've got 2 for like backup. So like if this one doesn't show and doesn't work, that's like these. I'm clicking them on. They're just not showing, guys. So I don't know. I don't know what the deal is. So I normally have to move them around. So right now we're in the negative a little bit. Again, if you were the 15-minute trader, you took that one. That was your signal to get in. You were in the negative for a while, and then in the positive for a while. It did not hit your first profit target, getting in on that, okay, for that trader. So neither one of us are in profit yet. And then, of course, we took, I may have to let the dog out here in a little bit. I don't know what she wants. That would be our entry. All right, I'm going to run, let her out in a minute. So one thing I want to do is put on pending orders, right? So we're going to come in here at our profit level 1, and you can fudge it past to make it a true 1-to-1 if you want. And we would need to put on 2 sell limits. So I can't go here, or buy limits. So I can't go here and hit buy 3 on a limit order because that would close out the whole trade. So we got to manually come in, hit buy, hit limit, and then change this to 2, and then place the trade. So that would be our take profit level. We're going to close 2 out there, and then need to close that without closing the trade. I don't know why those are hanging open like that. I don't like that because I don't actually accidentally want to reverse it. So you can always measure and look for, again, where our stop is here on that halfway point, and you can measure down to your entry. And if you want to go true 1-to-1, it's clear down here. And we'll mark that. So that would be our stop marker, and then or not stop. That would be our So I'll just mark that as our true 1-to-1 PT level. So this is how you should be back testing, you know, looking and forward trading is, does it, you know, go to what the indicator marks? This level 1 is what the indicator is marking as 1-to-1. Again, that is, it's the same distance from the low to the 1-to-1 as the mid box level. So it is using, the indicator is using the distance between the low and the middle of the box, and it's projecting that as PT1. So, but typically, of course, we're going to wait for a candle to close. We don't get in on price tapping the low of the box. So when we get in, we're getting in and the candle is closed past the low. So that makes this lopsided. This PT1 here by the indicator is not actually a true 1-to-1. So if you want, you can cheat your stop out. I cheated mine down a little bit, or my limit order. But if you want true 1-to-1, you're putting it clear down here. And it just may not get there. So it's something to keep in mind. If it does come down here, what's it doing? Well, to me, it's testing the high from yesterday's opening range. This right here was the high from yesterday's opening range. So if it comes all the way down to that, it's basically testing that price level. So I would love to see that, okay? However, I know they don't always get there. We're looking, and again, we're off the big downward slope so far. If I'm drawing trend lines, I would definitely want to mark from here and look at these levels. I can't draw it here, right? Because we've already passed through that. It's already passed through. Once if you are marking this level to this level, 0.1 to 2, or the AB, it broke through, but continued down. Once the candle here, this red one, pushed down this morning, okay, then you'd say, okay, we're making a lower low because it's lower than here. At this point, I can move my trade line down here to this high right here, okay, and that's the one we're going to sit with. I'm not going to draw one more aggressive from like here to here because as it's pushing through time, it might just slide through that. So those would be the two trend lines, trade lines that I would have on my chart. And then we can look at I have not looked at the power trade indicator this morning. It looks like I'd have to reset it. Across the board. I did not set that back up last night. Yeah. Is this going to mess up the other indicator? I'm going to pop that on the chart, but it may mess up the other indicator. Let me wait for them all to come back online. Yeah, I don't want that. And we'll reset this back. Because this chart down here, there we go. They come back. Let me go back to our quad view. And then we'll go back to Nasdaq. Let me put this back on the DOM. So looking across the board, let's look at all. I know we're already in a trade. Looking across the board, up here, ES. Remember we looked at that this morning, which one has played out better? Nasdaq ES. ES to me right now has a better performance as far as looking at that, what level has it hit, what level is it going to. So if I delete this off right here, you see a candle just barely closed, or was it this one? No, it was this one that closed here. You would get in. That's your signal candle. Too close to PT1 to pull profit. So you would have had to cheat your profit level down here, and it's just right now it's pulled back off that. So that's what we're getting across the board, where the breakout signal, the breakout candle, they've all been really close to PT1 and they just haven't gone. So we're going to see if that carries through. Same on all of them, Russell. So we're seeing the same moves across the board, which is good. Just not good for profit right now. I'm going to run the dog out real quick. I'll be right back. All right, so it hasn't been a good trading week overall on this. You know, everything's been posted in the forum, or discussion board, sorry, Discord. So first day we took a loss on the first trade. Second trade, there's our closed partial, and there's our runner. So we made back a little bit, tipped money on the runner. And the second day, Tuesday, That's our profit. So there's our profit on the closed partial. That's the profit on the runner. Another good day. However, the next day was a loss. And then, let's see, Monday, Tuesday, Wednesday. I'm trying to look at this. We gained back 190, and then runner, this was the runner. Yeah, closed to here, and then the runner was, yeah, I didn't do a redemption trade. That's what this one was, right? Lost first trade, gained back, gains the next day, Tuesday, and then the loss here of 280, and then this was the second trade where we gained 190, and then the runner, I didn't move my stop. Remember yesterday I did not move my stop on my runner, and during the back test I did. So I should have moved my stop on my runner. That would have been not a loss. So that added to that part of the losing day on it. So not great for the week. Our realized profits, 59 in the hole. So back testing was decent on it. So we've just had a lot of chop this week, and it only go into PT1. It wicked back on that last candle, wicked up toward the stop. So I'm glad we weren't stopped out on that wick. If you were using a quarter stop, remember we covered that, should your stop go? If you got in on the same entry that I got in on and used a quarter stop, quarter of the way back up the box, you would have been stopped out on this wick. Okay. So we're still in it because I used the half box. So again, that's part of that back testing as you're looking at previous moves, previous days. That's the stuff you want to look at. Could I use the quarter box? Could I put my stop a quarter of the way in the box instead of putting it halfway up the box? Yes, you can, but you would have been taken out, wicked out, and then the candle actually closed below the low. So would you have gotten back in on that same candle that you're wicked out? It closed below the box. So again, if you're taken out and have a losing trade, we want to take another trade on signal or when it closes past the low. So what are you going to do? You're going to jump right back in after you just had that loss. So, having the stop midway, we just hung on. We weren't taken back out. So I just noticed that more times than not, if you had your box halfway, you were safe and still in the trade. To where if you were using the quarter box, you were taken out and had to get back in. Taken out and had to get back in several more times. So, and again, you can use that if you want. But what happens is you're just going to take more trades. You're going to have more losers, but hopefully your winners will cover because you're using that tight stop loss. So that's one drawback to using tight stop losses. Nothing good on the day yet. What have I got in the way? Oh, now it wants to come in. Now I have one of those other PL levels showing up. There we go. Yeah, the chat thing's not working for some reason. All right, so we're just waiting this out. I forgot. I got to leave that on the DOM or that order pops up. We'll take this off right here. Get some of the clutter kind of out of the way. So we sit and wait. This to me again is a little boring, just because I'm used to trading multiple instruments. I kind of want to peek out to want to peek out to gold and everything. See what's going on. Where's gold so far? Bitcoin. I don't know, guys. I've looked at this on gold and Bitcoin, and it doesn't play out. So I'm just kind of scanning down through, looking to see what oil and gold and Bitcoin stuff are doing. So we've had a break here and a high and a test of that high. And then I do need to check this. I need to check the British pound. All right, so we're waiting it. We're down 300. So one thing I don't like for our short, of course, it came down and created a low here and then pulled up and then came back to test that inside bottom of the low. And then actually, this tall green candle pushed past this plateau area of the high, pushed back above the low for the day. So I do expect this to climb further. What I don't want it to see is go all the way up to test this down trade line. If it does, that means it's probably going to take us out. And then it still might bounce there and go short. So ideally, the stop to me would need to be up in here, keeping it above this high, right? As you're looking at lower lows and lower highs in here, we're just right now we're getting that deeper pullback, okay, where it wasn't ready to continue that bearish structure on a big push down because we're in a market change. We're in the start of the U.S. stock market. So that's where ideally I'd want it up above, again, this swing high right here. But according to the strategy, it's right there. So I could be taken out of this only for it to bounce and shoot back low again. So this still could be a loss. We could see this turn into a loss. And then if it bounces and shoots back down through the low, I'd have to get in again. If it doesn't break the middle and come out through the top. So you got to be careful here. Again, we're already in it. We're in it according to the rules. We're going to write it out according to the rules. I don't know why these order boxes are still showing that where you can reverse and take profit. Those should only show when I click on them, and I don't know why they're... And these should not show right now if I click off that order, so I don't know what's going on with that. I've never seen those do that like that. Of course, I don't paper trade a lot, so I don't see those orders anyways like that. There's that deeper pullback we're getting. Again, it may just pop up there and take me out. Because again, ideally, my stop would want to be up here. So the 15-minute trader, again, if you got in on the 15-minute break of that, you still didn't hit PT1. Getting in on that, the true PT1. Okay, because there would have been your entry. Your stop would have been at the mid box right here, where that stop is. And then your true 1-to-1 is down here. So it didn't even hit your 1-to-1, and you're in the negative now, just now on this last couple candles. So you would still be in the negative. So both of us are in the negative. And PT1 for neither was hit. Is this going to be a losing week for us? I don't know. It's not looking great for us. We're already down 59. And then if this trade pops negative, we're going to be down, 484 on it. So we'll be down over 500 for the week with only one trade day left. And then we'll see what happens. See, it's going to pop me out here. But again, we're trading this based on the rules that was back tested. So, and what I'm going to watch, if I get wicked out and taken out, one thing I want to watch is if we went, again, I'm not going to move it right now because I want to make sure if price comes up and hits it, it hits it. But ideally, again, my stop would have been at this level, not putting it really, I mean, it just happens to be there where my stop would want to be above this swing high, using highs and lows, traditional charting technique. So using a previous high, so you get in on a short here, you go back and use that high and put your stop above that, which would be right here. That just happens to line up today with the 15-minute, first 15 minutes, that mid-box. So that's ideally where I would have wanted to have it. And then, of course, if you're going true 1-to-1, then we would have to squeak our target even further. So again, if the stop was here and the entry again is here, then our first take profit, I'd have to move it clear down here for a 1-to-1 if I push my stop down there. Okay, on back. So everybody's going to be a little different how they do that with their stops. Glad to see a push here. It was like milliseconds away from taking us out. Grateful for that. But notice where the stop ends up being. So again, rule-based trading, rule-based mechanical trading, I put my stop at the mid-box level. Okay? The first half hour, take the high-low, halfway in the box is right there. So again, that's why I put it. That's the rules that were tested. That's what we're sticking to. But again, if you're looking at the swings, if you're paying attention to swings, right where that stop is, okay, right where that level is, if you look over to the left, well, that's right where these candles turned. They even wicked past a little. That's right where on this drop, it stalled out right there. That's that stop and go action, right? Where it came down, stopped, you got one green candle, and then continued on, a little stop and go action. So that is right at that price level. So putting my stop mid-box, because that's our rules, that's what I did. However, if you're looking at traditional charting, you're looking at the candles, how they're moving, because that's showing you the price action. What is price doing right here? Well, it's turning at that support level that was here. So down here it pulled down, was supported, and then when it come up here, it was resisted. So old support become a new resistance, it bounced off of it. So that being said, where I put my stop, because it was halfway in the box, I was kind of asking for trouble. I hope everybody sees that, just asking for it. But again, when I back tested, I just back tested the middle of the box. Another sell signal off the power trade indicator. We'll see if that follows through. If I'm drawing trend lines, trade lines, I would have had a line here to here, and that would be my resistance line. I don't want to get a lot of stuff on the chart, so if you guys don't want those lines on the charts, let me know. because they'll get to be too many. As I trade, I get a ton of lines on my chart. I don't want to move my order. I want to move this circle. I just want to make it smaller. So again, I'd be watching for a break of that retracement line. Break of the retracement line, close past the retracement line, and then push back up to that area. Not sure if we'll get it, but we wanted to see like this here, breaks through, comes down to possibly test the, what is the magnet on? No. Test that area and come back and test that. That's what I'd like to see. Yep. But it may pull deeper. I was trying to get to that inside because basically this level right here that it wicked to, that level, it wicked to that. If you look to the left, that's our inside bottom. So this swing down and up, this dip, okay, our low is here. That's our low to break, most recent. And then we have the inside of that swing. So that would be an inside bottom because this is the bottom of a swing, right? Swings down up, that's the bottom of the swing, that's your low. And then the inside of that may be the only thing that it hits. Yeah, that's what I figured. So I try and take a lot of this as I do stuff, but we'll take those back off. So right now it's breaking that retracement line. So like I said, though, it could come back up to test this area right here. And then, of course, we'd want to see a bounce, but then we'd look for that to push. It works way better than Forex. I'll pull that over there. So it's broke, right on that retracement line, or closed, and then now we're seeing a push off that. So we'll see what happens. So right now it's at the inside bottom there, which if you look, the inside of this swing, the bottom of this swing, that inside bottom is right around the low of the first half hour. These two white lines I'm going to leave on the chart. Those are the high and low, opening range, high, low. I'm going to go ahead and take the, you want me to take the 15 minutes off? We'll take that 15-minute one off too. So this one would be our low to break, again, right here. So right now, as we're looking for it to continue short, we want bearish continuation. As it's moving down, it's going to make a lower high, lower high than over here, lower low, lower high. So we're looking at it printing lower lows and lower highs. Even here where we're at, we had a high, a lower low than back here. It came up and created a little high, pushed down to create a lower low than back here, then came over here to create what? A lower high than this one. It's testing those insides of those moves. And then, so it's getting close to the previous high, but it's stopping short, which is what we want to see, because then we call it's a lower high. So once price came down here and we had that push, our candle I got in on, or no, that's the 15-minute trader getting in. No, on that one. This was ours, sorry. So as it pushed down and we got in here on this candle close, once this candle pushed and closed past the low, we're getting in on that because of what? Because it's created a lower low. We don't have to wait for this pullback. We know as soon as a candle pushes beyond the low, it has technically made a low already. It just hasn't formed that pullback yet. So basically, I sat through that pullback. And then we're getting a little push off that. So ideally, we would want it to, of course, come down and create a lower low than this previous one right here. And it may not do that in a straight line because price moves in waves. We're seeing long wicks right here. So for my short, that's not good. Long wicks typically mean that you'll get a turn in direction. So it doesn't always have to happen. But to me, I could see it pulling up there. Don't know if that's going to happen. We'll see. But again, it's seeing this price level. Prices coming down here and stopping. Or did on these two candles at least. Would love to end up on a positive for the week, so let's hope for that. And again, when I went through in replay mode and back tested it, it was just like this. It was getting in short for 3 contracts when it closed past the low, setting up my 2, well, you can't set up limit orders, but looking for it to hit PT1. So putting on 3, stop halfway through the box, and then closing partial when it hit the first TP level. Closing 2, leaving 1 runner, but moving the stop to break even. Now, yesterday I left the stop hang, and for that I lost back $60, dollars on that runner, where it was still positive on the day, but not as much. So wick down there to test that low. Test the turning point here. Another long wick. So it wouldn't surprise me if it goes up. And that's what you have to think about with this. We're starting to see long tails, long wicks. So we're still bearish. However, the bullish side of the market's pushing back. So it may, pull back. So it just shouldn't surprise you if you look at the individual candle moves. That's where your focus needs to be. And watching them going, I'd love for this to push down. I'd love for it to push down and push right to close these 2 orders. However, it wouldn't surprise me if it pulls back up into this level, testing 1, this down trade line, also testing this right here. This would be our inside top. As it pushes up and turns, we have a high, and we have the underside, the inside of that high, which is our inside top. So that's why I moved the circle, target circle on down. It wouldn't surprise me if it goes up and tests that level, which would be the inside top, the down trade line. So you just look at that and say, it wouldn't surprise me if it happens. So if it does happen, it starts pulling back, don't be surprised. Don't be shocked, don't be surprised, and don't have a panic attack. I know when I started trading, of course, today it's easier on this. I mean, I've got no emotions because I'm paper trading it, demo trading it. So there's no emotions to it anyways. And you just have to learn to block your emotions out anyways, especially when you go live. I know when I went live money, I did have a bottle of Tylenol and Tums, both, at my desk. I was a mess. You sit, because when I started, I put 20K in. And you're risking that amount of money. You're putting up that amount of money. It's a little nerve-wracking. And I was still very, very new. So, yep, trader's toolbox would always have Tylenol and Tums. Pen, paper, computer, phone, Tylenol, and Tums. Could be TNT trading. All right, so glad that candle, is bearish. Strong bearish candle, that last one. So we just got to see if it'll finally push down and break this low. We're finally almost back in to profit. We're still down 40. So I don't watch, we can see our price. We can see how much we're up and down. I don't put it on ticks. Some people watch ticks instead of price. That's typically you're shooting for X amount of ticks, but you know in your mind that's X amount of dollars. So I don't put mine on ticks, trying to trick my mind into not looking at the dollar amount. So I'm looking at the moves though. So even though the price is going up and down and they're not really concerned with the price, we chose to take this entry off the rules-based trading, right? Chose to take the entry short and put the stop at the halfway point. And even though we were in the negative here quite a bit and almost got stopped out, you shouldn't be looking at that price. You'll see it, but that shouldn't be your concern. Your concern is just watching the moves. If we would have been taken out, let me point that out. So if we would have been taken out, this would be your other entry. Okay? So again, if we would have been wicked out, that would be your other entry that you would get back in on because it closed past the range low. So that's your second entry to get in. So if we would have been wicked out, then I would have had one loss on the day, and then this would be our second trade. But since we weren't wicked out, we're back in, or we're still in. I need to get some music on or something. It's too quiet over here. Well, nothing exciting yet. It's pushing. Keep opening up the wrong app. A couple of these look the same. Has anyone been trading this week or traded it before? Kind of interesting. I know we have a few people in the Discord that do trade it or have traded it. There's our little pullback. Again, shouldn't be a surprise, but you look where it turned. Again, we have the inside bottom over here, the inside of that swing. So it failed. So far, it's failed to come down to even test this low. It stalled out at the inside bottom. This one stalled out at the inside top. It failed to go up and test the actual high. So what does that mean for us right now? So we're seeing lower low. We saw a lower high still. Okay, this one's lower than this one. But over here, we're printing lower lows. Well, this low did not get lower. So it failed to make a lower low on this move down. So again, as you're watching the swings and keeping up, again, on the way down, bearish movement, bearish momentum, bearish structure, we want to see lower lows, lower highs. We're seeing lower highs. Every time it's been a lower high. However, we're not seeing the lower lows anymore. We have a lower lows over here, but then this low failed to break that low. So lower highs, but higher lows, what do you see forming in there? That would be your pendant formation. I'll take them off the chart, but you'd come in and draw a upward line like that. You'd come in, I'm not going to worry about coloring myself, I'll take them off, and you would draw a downward line like that, and that is what? It is a flag formation or pendant formation, and we know that it's going to typically break out, and we don't know which way. It'll break out from the high or the low, so we would take and extend the triangle. I just like having the triangle on the chart, And I don't have to leave it. We'll take it off. But that's what we'd be looking at right now. Okay, we're looking at that pendant or flag formation as it's still printing lower highs, but it's printing higher lows. So I would, again, want to draw the line downward, and you can come back and bring it way up here, and that would be it instead of this one. But we have on these last three highs, and you would project that out, and I need to move it kind of since I did that. And it looks like we might be breaking. So my point is, you're going to draw that triangle, and then we're waiting for it to break out one side, one way or another. For us, we want it to break out low, which it's doing right now. So, but you should always be aware of that, because when you get this flag formation or pennant formation, it is going to break out one way or another. What we didn't want to see is this. We didn't want to see it go up, break that this more aggressive downward trade line, and then come back and test it and break out the top. That's what we did not want to see. So far it's good. We'll pull them back off. Let me reset the chart. So we're seeing that push down, order still not triggered. So again, we took this trade, was not wicked out, barely. It almost took us out. It's gone down. It did hit PT1 as far as the indicator's concerned. So that's where I would have closed out too. Because remember, originally that was how I was trading it, was if it comes down and hits that PT2 then, but I've since adjusted it. So we've had an extension, we've had a push. That is where and I need to pull that back, because during the back test, that's where I had it. So I'm trying to grab a little more profit today. We'll see if it kills the order. Now, right now, it just killed the 2. So I was able to get that a little more profit. It still wasn't 1-to-1, I don't think. Stop was here. We turn the magnet off. Let's just look at where the order was again. Stop was here, or is there. And then this was, so we didn't get true 1-to-1. Okay, it wicked down, took us out. But true 1-to-1 would be right here. So we still didn't get a true 1-to-1, even though I squeaked the order down some. So we did get profitable trade on this. What is it? 203. So not a bad trade for the day. I'm grateful that we saw profit. Now, according to the rules that I set and tested, this is what I did. I'd pull this to break even, to where we're not going to lose anything against the gain. Yesterday, I didn't do that. Yesterday, I kept my stop and moved it here. I moved my stop halfway, because that's traditionally how I trade, is I'll put on 10 contracts, close out 8 contracts, leave 2 on, and instead of moving my stop to break even, I tend to move my stop just halfway between my entry and so it'd be like in there. So halfway between my entry price and where my stop originally was. And that lets the 2 runners that I would have on only half the risk at that time. So we're going to pull it to break even, because that's how I tested it. If you got in on the 15-minute break, close past the first 15-minute time frame, you sat in the negative for a while, went positive for a while, didn't quite hit your PT1, because that's what this line is, I believe. No, that's our line. I took it off there, guys, so I'd have to go back and measure. But basically, a true PT1 again would be, let's look at that. There would be your stop, and there was your entry right here. So you would have got in today before us. Both traders, whether you're taking the first 15-minute break and close past that low, you sat in the negative. We got in, sat in the negative. If you would have taken this and put your stop at the mid or halfway box, you would not have been taken out. So almost the same identical situation again. If you got in trading the break and close past the first 15-minute of the market, then again, you sat in the negative as well. Didn't get as close to being taken out as I was when it wicked up to mine. But it came up here and wicked up, and your order would have been there. So Still, both traders had to sit in the negative. But again, during the back testing, I just seen too many times where it would come down close past you, get in, and it would go completely backwards. So far, looks like we're good on the day. I'm about to get stopped out as it pulls back. So again, you have to decide for yourself if you're going to move your stop to that halfway point, which would be here. I know it's labeled 15-minute, but it would be where we would have our stop now if we're giving it that little extra room. And why would we want to do that? Because you see, as it's pulling back, what level is it going to test? So you're always, again, should be watching the candle movements. We had a good push down, hit profit. We have a nice push up here. Where's it headed? Well, the first place it might stop is right here, okay? This low. It's not going to touch the wick and stop. We already know that this is indecision in the market, that wick. Buyers and sellers pushing back and forth, okay? This is where price turned. So we could see it coming clear back and testing that inside top, right? Testing any one of these levels, hitting there. You look at the inside top, and what is it? Well, it's the opening session low, the first half hour as well, right at that level. So we could see it pulling back there, right, to test that level. And if it does, surprise, surprise, it would stop me out because my stop's here at my order. So it wouldn't surprise me if it goes back to test that level and then just moves on. And it could go steeper. It could come all the way back up here to test that downward trend line for a deeper retracement to test that. What I'd love to see is what is starting here. I don't know if it's going to pan out. I'd love to see that stop and go action, but we just don't have that momentum this morning. It's 11 o'clock. We don't really have momentum today to drive this, but that's what I'd love to see. That push down and then, pull back and then just another dive down, that stop and go action. But what you have to look at is every time it's wicking, there we're taking out. So we're going to just pop this as being stopped out there because I want to be aware of that. Again, one thing I need to be aware of is if we're stopped out there, this is where we just got stopped out. Does it pull back deeper? Does it pull back and come clear up here, okay, and hit this stop? Well, then I'd say to myself, well, I'm glad I got stopped out at 0 on my runner, because I'd rather be stopped out at 0 on my runner than negative whatever this would be. Okay, so that's the data I want to look at by the end of the session. So we got about another hour. I want to see what happens. Does it pull all the way back and end up ultimately hitting this stop where we move the stop to the halfway point between our entry and where our stop originally was? If it does, then I'm thankful I pulled to break even. If it doesn't, if it comes up here and turns and then shoots down further, if we see another leg turns there or comes back to the trend line, and then we see another leg down that breaks this low, this new low to break, well, then I'm a little disappointed that we didn't leave our stop out there. But again, the way this was back tested was to pull the stop to break even. But something you have to consider when moving your stop always is what's in the way of my stop to protect me in case it pulls back. And there was nothing. We had nothing. So that's aggressive on the stop. So where are we at? So that was negative 150. I thought I had that set on 0. Must have moved it. So, 200 on the day today. So a good day, good profitable trade, and that's all we'll take. If it happens to go all the way back here, pulls back up into this, zone from the first half hour, and then pops back through again, I can still take the trade. I can get back in. But the chances of it doing that before noon are pretty slim. It's really got to start moving. So far, not the best week on this. That we're at 142. That's okay. I'd rather be at 142 on the week than, negative 200 or 400 or 500 or 1,000. I mean, we'll take it, but it's just not the best week. And that being said, remember I said in the back testing that a lot of times Nasdaq barely got to PT1 during the session. Where's it at right now? It's at PT1. That horizontal line right there. So it barely breached through it. PT2 is finally on the chart. And since price came down and this candle here, this long one closed, but actually once it started pushing down, we knew it was making a low, making a new low because it was pushing past the previous low, right? So we've made a lower low. Great. That's great for our bearish formation, made a lower low. So we would expect it to make a lower high. It might get aggressive. If it just starts dropping, well, then we're seeing a more aggressive move. I just don't know if we'll get that today because, again, no real news to move the market. And historically, it has just gotten to PT1. There's several days. You guys saw that on the spreadsheet in the beginning. I don't know if everybody was here for that when I went over going back and looking at how many times it only went to PT1, 2, or 3, or 4, or 5. But it's in that tracker sheet. Seeing a lot of indecision in these candles with the long wicks. If you see a long wick out the top, long wick out the bottom, such as this candle, it's a big bearish bullish fight. We have a long wick here down, but then it's a green candle. So if this candle pushes up and closes, if it pushes up and closes, then that is a strong bullish candle, right? So we'd expect a little more move up from that. Alan, on the higher time frame, I wouldn't be doing this. I mean, if you're using an opening range break, it doesn't matter what candle or what time frame you're watching it on. You're looking for it to break the range high and low. So if I was going out to the higher time frames, like the 4 hour, what I'm doing is marking reset. I'm marking these. I'm marking the swing high on a 4 hour, swing low on a 4 hour, marking those zones, which is marked on the wicks. Look here on the move up. You got a long wick up. So we're marking that wick because that wick is an indecision period where we have bullish pressure, but then we have bearish pressure back. So indecision in the market on that zone. That's why we're marking the zones. And then if you look at that 4 hour zone here, look over here to the right, it pulled up into that and hit the mid zone, and then boom, we're seeing bearish movement off that. If you look down here on the bottom, marking this 4 hour wick over here, again, have a big push up, push back, big push up. So higher lows and higher high over here. Okay, a low, a higher, or a higher high than over here, a higher low, and then a higher high. And you got to ignore the buy sells because the buy sells are not set up on this time frame. If I was setting it up to trade the 4 hour, it would be they'd be set up on a daily, weekly, the 4 hour daily and weekly. So ignore the buy sell right now because of that. But again, marking this wick low down here, the low of the wick to the candle body, that's right where it stopped here. It popped down and stopped, pulled up, popped down and stopped, pulled back up to the top one. Okay, so you always want to be aware of the higher time frames, but that's what I draw on the higher time frames. I'm not trading a breakout off the higher time frame on that. That would be a whole different complete strategy if you're doing that, no matter if it's 15-minute or whatever. So this one specifically is just the opening range break. And since you're trading the stock market, U.S. stock market, first 15 minutes or half hour waiting on a breakout, I would not be on a higher time frame. It'd be a 3 or a 5 is what you'd want to be on. Because you're only looking at trading for a few hours in the day. So we got that deeper pullback. So as of right now, as it sits, we got stopped out here, or I got stopped out here. So as I'm looking at the candles, as I'm looking at the chart, and what it's telling me so far is I got stopped out at a good level. I got stopped out at break even, and it's pulled a little deeper. And if it ultimately goes and hits this stop that's marked, that would have been if when I got in the entry, closed out partial, moved my stop from here down to here to cover half that position on my runners, half that open position. Ultimately, if it goes and hits that stop, then I would be thankful that I moved it to break even, because then I actually, on my runner, broke even versus my runner taking a loss if it pulls back here. So that's why I like to leave my chart marked up with these and watch. I'm actually not just sitting here staring at the candles. I'm actually staring at the candles and looking to see what the candle information is telling me. And it tells you a lot. Well, I can't turn that on, so I don't know what's going on. So now we're back into that range. So we've taken one positive trade. I said that in the past, in the replay tests, and over the past months, the plan was that between 11 and noon to take every entry. If I'm going to take, if it's going to pull down, it will not signal. So keep that in mind. If we get a pullback here, and then it comes and breaks and closes past that low again, that would be our signal to get in, the close past the low. The only way we will get this right here, we'll get another triangle, the way this indicator's set up is price has to close, not just touch, that midline. So price would have to come all the way back, a candle close past the midline, drop all the way back, close below the low, and we would get a signal like this. Okay, so if price goes back up in here and does not close past that midpoint and goes back and we get a candle close past the low, I have to make that decision. That's my signal that I need to take that trade, is just that candle close, because I know that and if it doesn't go and close a bunch of the midline, we will not get a sell signal. Okay, so that's what you have to keep in mind with this indicator, the way it's set up. I like it so far. I didn't turn the alarms on today. Tomorrow I'll turn the alarm back on the indicator, because yesterday it didn't signal till late, and I don't know why. I got to look more into the coding and find out why it didn't signal when a candle closed past the low. It signaled late, and it signaled almost as if it was signaling when a 15-minute candle closed. Because we're doing 3-minute candles, and I think the signal came 5 candles in on the move. So like when it broke and closed here below, that signal came five candles later, I believe. It was like that candle and 4 others, and it would signal here to sell. And I have to go back and look, but I'm almost positive. So I'll have it run tomorrow, but that was my thinking as I looked back and thought about it. I thought, I'm thinking that thing's waiting until a 15-minute candle closes past the low, the actual signal to sell. And I don't know why they set it up that way. So I got to go look and change the code in that. because I want that alert to come up when a candle, 3-minute candle close, any candle, the current candle, whatever chart you have it on. If it's a 5-minute, it'd be a 5-minute candle. So right now we're flattened. I have to decide if I want to take a chance. If this happens to close down, it did pull briefly back up into that zone, just barely. I would rather see it pull deeper, okay, and then pull back down. I want to see a bounce. I don't want to see a stop and go here. Don't want to see it pull up and then stop and reverse. Okay, a stop and go's okay. Pull up, stop, and then push up. And then you can pull back and close below the box and give me a signal. So I'm glad we got this push, and look at where it's at. It's at my stop. So if I would have, we took the trade over here, sat negative for a while, went back in. If it would have hit my stop here, I would have got back in here. First trade would have been a loss. Second trade, get in here, pulled profit. Second trade, we would have locked in profit. If you moved your stop to break even like I did, you'd be stopped out. So the second trade would be positive, but it still would not have covered the loss. We'd still have a small loss on the day. Okay. If I would have left my stop here, originally, it's here. And when you close to break even, again, you can choose to pull your stop to break even like I did today. That's how it was back tested. Or pull your stop halfway, between where it originally was and your entry, and risking still half on the runner, half loss. So that would have been stopped out. So on the second trade, or on our trade, it was all positive, okay? So as we looked, we lost back $1.50 because I didn't have the stop on there where it needed to be. So it's a positive trade. Getting in on here, closing out partial, moving stop to break even. Someone that is here that got in, they just got in a little early. So you would have been in more in profit if you would have taken the 15-minute, the close past the 15-minute low. However, again, a lot of days where it does that, it turns and goes and hits your stop. And if you used a half stop on this box breakout, you'd have been okay. If you used a quarter stop, you'd have been stopped over here and had to get back in, which would have been that candle right there. So you would have had a loss if you used a quarter stop. So either one of us taking the trade here on the first 15 minutes and the breakout of that, or taking the entry we took, either one of us, if we used a quarter stop loss, I had the stop loss here instead of the halfway point. This person, if they had their stop here, quarter of the box instead of the halfway point, both of us would have been stopped out, only to have to get back in again. So instead of taking a loss, having to get back in, we just both sat through the negative on the day. I like the moves it's made so far because it's still in that downward pattern. We still have bearish structure so far. It's in a pullback. Traditionally, I'm going to draw a trend line, a retracement line from this low to this low, and then I would draw a retracement line from this candle low here to the current one we're making, and that would be my more aggressive retracement line, looking to see if it breaks that and bounces here. So are we going to get a bounce here? This mark was here originally, and then I moved it down here. This candle wicked up toward it. It just didn't go all the way to the line. Right now we're at that line. So are we going to get a bounce here? Or is it going to come all the way back up and then actually reverse on us? So as far as structure, we're still currently in a bearish formation. Bearish structure. So we'd expect another downward move. That's what we're looking for. Whether it gives it to us or not, I don't know. The other place we're at, if you look over to the left, as we're looking at swings, right? Swing up, swing down. We have 2 points of interest. Swing up, swing down. Our 2 points of interest are the high, which just happens to be the around that half point, and the inside of that high, which would be our inside top. And that's where we're at right now. So those are our 2 points of interest as far as this swing is concerned right here. And that's where right now we're at. And you notice it just does not pushing up above it right now. It could pop, but. So for us, for that bearish continuation, we don't want to see it break this inside top. We don't want to see it do what it's doing right now. It's okay, it's testing it. I'd want to see it pull back down below that line. I'm going to remove this stop line. So this would have been my stop if I would have only moved my stop to the halfway between my entry price and my original stop. So I would have lost back on that one runner. I would have lost back half instead of 1-to-1 by moving my stop. So still would have limited my risk, limited my open risk there by moving that. But instead, of course, we moved to break even. So we got to wait it out. We'll see if we get another entry before noon. If it's going to push to the top, I'd like it to just go ahead and get up there. If it's going to break out of the top. So we can take another trade. But okay if we don't get another trade. So we got about 40 minutes left. Again, we said between 10 a.m. and noon, we'd take all the trades. So we're up a little bit on the week. Not much on this. And like I said, it looks like so far as the looking back that S&P has been the dominant out of the four. I don't know if was everybody in here when I was showing that earlier? While we're waiting on candles to tick, does anybody want to see that? The tracker and the back test on it. So we got a break. This candle opened up. We're getting a push. And we got about 30 seconds left on this candle. So it looks like it's going to close above that line. We'll see. It still could bounce and go back down. But the fact that it's breaking this downward trade line, I could see it going, of course, up to the outer trade line. I always typically will have two on a move like this because we'll have a trade line, down, which is this one. And then as it drops steeper, this was our trade line from this high to this high. And that's what it looks like it may pull to. So we draw from that point to that point. That's our outer trade line. That's our main trade line down or trend line, whatever you want to call it. Again, I call them trade lines because I'm going to take them off when my trade's over. At the end of the day, they're coming off. Not to be confused with trend lines. My trend lines are drawn off the higher time frames. So the 4 hour and 1 hour and 15 minute. So this would be a more aggressive. That's our inner trade line because it started moving steeper, started dropping quicker, moving steeper. We still draw a trade line down that, and that's the one it followed on this steeper move. Again, it was from here, from there to there drawing it, and then it just followed that so far. And now we got a break of that. So it looks like because we have broken the high over here, it might form bullish structure over here. Right now, this is just a steep upward move with really no pause, nothing but green candles on that. A lot of wicks down here, and it rolled over. And this candle right here broke these wick highs right here. As you're looking at what it's doing, what it's done. So again, this tall green candle right here broke past this low over here, broke past these tails here, and then we've just been pushing ever since. So it may head all the way back up here to the outer trend line since it broke this. So we're staying out. According to this strategy, we're only going to take if it breaks through the top of the box, closes past, or closes back through the bottom. My one caution would be, because I see this right now, is that if it comes up here and breaks out the top of the box, depending on how quick it gets up here, is it going to also break this outer trend line? Okay. So it might be a good play, but we've had a big move up so far. So I don't think that will become exhausted but will we get a pullback off that? You know, 1 or 2 candles down. And they should be decent sized candles if that happens. Because we're looking at the wicks on this, the wick on this candle right here. We've had a good push here down. So we still have sellers coming in right now that tried to push it down here. But the buyers might be stronger than the sellers right now. So we may see that push up. And then if we start seeing long wicks down where it's pushing, then we're seeing strong selling pressure step in. But we're nothing but green so far. The only way to trade that is not the range breakout strategy that we're trading. You have to look at the highs and lows, and you would look at it breaking, of course, these highs right here, that low right here, this dip, because you're looking at the swings. So right now we know it's a decent pullback is all it is on this whole downward move. And if it comes all the way back up to test that trend line or the top of the range, if it comes all the way back up there, it's basically testing this area of price right here, which that area of price, that high, is the bottom of this candle. And that's also the bottom of that right there. So again, always look back, look at your highs and lows. But again, if that may be all it does. So if it pulls back up to test this top of this range from this morning, the top of the opening range, which is also testing the downward trend line, which is also testing the high here that price it, which is also testing the inside bottom or inside top. So the underside of the high, which look back to the left, is basically testing that low of that swing down and up. So multiple levels. So multiple reasons why I think it could turn there. So that's my one word of caution. If you're looking to take that. Just a word of caution. Doesn't mean that bullish structure would form. Right now, we just have a huge bullish push, okay? We have no bullish structure, so there's a difference in the two. Nothing but green candles, up, up, and away. That's a strong bullish push. There's no structure to this at all. If we went to a 1 minute time frame, you might see some structure. You might see some swings up and down, and we'll pop in there. Not really. I mean, you see it pop up, just went sideways, pop up, a little pullback on a red candle. So no real structure over here either, even on a 1 minute. So again, structure is going to be the swings, the swing high and lows. We're just seeing a big, strong push up, up, and away. And again, there's no structure to this. Structure would be if, after one of these green candles, we had a pushback and a bounce and then a push up, and as where it is here, well, then that's structure. That's your low. You'd have a high, you'd have a low, and then you're pushing to make a high. So that's the difference in the two. Right now, we have no structure on this, no bullish structure. It's just a big bullish pushback. So pretty much on these big bullish pushbacks, you don't know where it's going to stop. I don't know if it's going to keep moving and keep going. How long is that bullish structure going to form? And you can also look at volume to see how heavy volume stepped in. There's 17, 14, 13. So we're looking at the volume up there at the top of the chart, and you'll see high volume here. But then right now we have some low volume in. So is that bullish momentum dying? Is it dying off? And then if it's dying off, are we going to just get a stop and go where the bullish momentum picks back up? Or are we going to get a stop and turn, stop and reverse? That's what we got to watch for. And again, if I'm using traditional charting, if we got to watch this, because if this candle closes above, I said I was going to take it. So I know I've got my high-low lines on here, but according to the strategy, if it broke out through the high, broke out through the low, we were going to take the trade. So as long as it was before news. So I'll get 3 ready, locked, and loaded. I don't like the fact that if I take this trade, how strong this momentum and push has been. I would expect a pullback, so keep that in mind. I'm going to go ahead and take it on this only because that's the way I back tested it. When I back tested, I ignored everything. I did not draw any trend lines. I didn't even have my 4-hour levels on the chart at all. I had none of that. Just naked chart with just the indicator on there. So we'll see what we're getting. A huge push, guys. So this goes against everything. If I take this trade, this goes against my traditional trading 100%. I would want to wait for a pullback and bounce. But again, when I back tested, that's not how I took it. Well, if you look at just hold over a candle and you look at the volume number at the top right now, it's 16.12K. If you come back here and look at these small candles, you know that on a small candle, you should find low volume. A big candle, you should always find large volume, okay? So we're seeing 22 right now. So we were just at, what did I say, 17 or something? So there was large volume that stepped in. Now we're at, and it hit 24 was the high volume. So it was at like 17 on this huge drop back. It went to 24 on the, if you look at the volume. So more volume stepped in and pushed that thing right back down. So I'm grateful for that because it was going against my traditional trading for me to hit the buy button on that. But again, I was going to trade this as I tested it. So again, traditionally, I would have trend lines on here to help me to know that, hey, it might not, break out the top. And that's what I did. So I know someone mentioned earlier, remove the lines. I tried to remove as many as I can, but I did keep these 2 on there because they are our downward trend lines. So we've had huge volume. Right now we're at about half what we had here, 24. We were at 17. So we're at 10.6 right now. So you can watch the current volume as long as you don't move the cursor around candles. But if you sit there and look at the small candles, you'll see volumes like 8.7. Okay. If you look at one with the big wicks, you'll see volume. So if there's any one that's a big candle or big candle with wicks, or it could be a small candle but long wicks, like this one here, you're seeing 15.2 on the volume because it's got the wicks. So any big candle or this doji candle back here, it still had 20.4 on the volume because, again, you're seeing long wicks. That's back and forth. That's heavy volume trading. Okay. Again, the small candles, like this one right here, 1.95. These in here, 2.9, 2.17. So those are small volume candles. But again, you look over here at the long wicks. That's a little more at 7, 6. So you can look back and see the volume. Anything when it gets to 10 and above, especially when it gets to 15 to 20, 24, then we're at high volume as far as I'm concerned. So see how it's back up at 18, 19. So high volume stepped in. And you can look at the volume, it's on your chart, but I already know there's heavy volume because if you look at the low and a high, that's a large candle from the low to the high. So we know volume stepped in. That candle is not going to be long like that without volume stepping in. Now, once volume steps in and trades, we expect what? Well, we're getting movement. We expect some momentum, and then that's what we're going to try and profit off of, is that momentum. And you just have to be in on the right side. Okay, I'm going to buy 3 because that's what I said. This candle closed. It closed above the box. The only thing I think is going for me is that it did close above my downtrend line. So according to the rules on the opening range breakout, I said I was going to take all those. Profit target 1 is here. So I'd want to come in with a pending order. And since we have bought 3, we have to come in and do a sell limit of 2. I would have rather seen it turn here, guys, just to tell you. More appealing to me would have been when it pulled back up to this inner more aggressive down trade line, for it to turn there, close back below the box, and take it short again. However, I didn't get what I wanted. Imagine that. Remember, I always say you get what you get and you don't throw a fit. What I wanted was for it to turn right here, and then go down. That's it. I wanted it to turn there and go down and breach this low and make a lower low for our bearish continuation down. However, that's not what we got. Instead, we've got that huge push up. Again, with no structure, it's just a big bullish move. It's just a big bullish pushback off all this downward momentum we've had today. So today we've had that huge downward move. Right now we just have had a big push off that strong bullish momentum on that. So I don't know if we'll get a continuation on that. I mean, we're in short off the system, the strategy as it was laid out. And then the one thing I have that is it going to get to PT1, where my limit order is, that level, because we have a 4-hour zone right there. So if you've got the 4-hour zones, I could see it going up and popping through. So I could see us getting wicked out on those sell limit orders, which would be great. If you're trading real aggressive, which I don't do, and this is along with stop movement placement, I know people that will sit there and trail their stop up and keep it a few candles back. So here's our current candle. Here's the previous candle. They would have their stop right here below this candle. I'll move it back here in a little bit, but below that candle. And then when this candle closes, they would move it up some, probably like half. You wouldn't move it all the way to the bottom of this candle underneath. But if it starts getting that huge move up, if you were in this, I've done that before where I've trailed my stop kind of tight. And basically, you use the low of the previous candle, which if you were trading this move up and you had your stop here and then you moved your stop under here, you would have been stopped out on that wick. But you can always get back in. So if it's scooting and it's real steep and moving, yes, you can trail it tight. You just know you're going to get wicked out or taken out, and then you'd have to get back in. So no big deal. You'd wait for a pullback to get back in. I want to see some more volume step in. Where are we at? We're at 3. So volume's kind of died off right now. This last candle was 13. That candle right there was 21. That candle was 24. So we saw volume steep creeping up here. As you look at the moves, these candles, right? Well, this one was at 10.7. This one was 8.7. 13.4. 13. So you've seen it step up from 8 to 13, go up to 14.8. Volume increases now to 17. Volume increases now to 24. Volume increases now to 21. So it pulled back a little. Here, from 21, it fell to 13. And right now we're at 9. So we saw as the move went up, we saw volume keep increasing every candle. More and more traders were jumping in. Okay, we saw an increase in volume. So it started out decent, popped up. You kept seeing an increase in volume every candle on the way up. And then we saw a decrease in volume. So right now, we're in kind of a middle where we've got low volume. So we need buying volume to step in. And I don't know that we'll get it, but we'll see. We need more buyers to jump on than sellers right now. And when I say that, I kind of use the term loosely because you have buyers that are long on Nasdaq. You have sellers that are short on Nasdaq, but then you also have profit taking. So those that were long on Nasdaq in here at some point are going to close out to take profit, which will create a downward move. So it doesn't always mean that more sellers are jumping on just because we have a pullback. We also have, again, there was heavy volume in here on the way up. So a lot of buying on the way up. Hardly any selling. Everybody was buying on the way up, okay? And part of this initial move was probably everybody short this morning. So you have all the traders trading short, and then they're going to pull profit. So they pull profit, and you have buyers step in. That's what creates that initial move. And then it pushes up, and that's what we're getting now. So it moves up, and then now you have the buyers closing out position, but the sellers stepping in because they're saying, okay, it's pulled back enough for me to sell again. So you're always going to have the bias. You're going to have the traders that are biased and they only trade bullish. There's people that will only take long trades. I'm going to take gold trades. I'm only going to trade long, just like you would a typical stock. Buy a stock and hold it. You want growth. You're going to buy for it to go up. There's traders that will do that in day trading too. They will only take trades. Now, I do that to an extent. It's with the the power trade indicator down there on the bottom. Sell when it says sell, buy when it says buy. So we finally got a buy on that. That's kind of late because we've already had to move up, but that's okay. That just means that all three time frames are in line. Our limit order was closed. Now, again, I said I was pulling my, ideally, I'd want to do that right there in my trading, okay? Because if I was trading and took that like I did, I would have this on the chart. Where'd we get in? We got in on that candle right there. So I would have that on the chart and then look to take profit at the first profit level, which would be here. So we closed out at a good profit level. That would be where my stop is. Actually, no, we would be down there. Where I got in, the stop was actually back here. It won't let me move the tool. So it hasn't hit PT1 on that yet still. It's close because our stop was way down here. So if I'm going to move my stop here, or the halfway point is where I'd move it. Sorry, get my act together. So it'd be like right there. I would move my stop to halfway traditionally to limit my open risk on my runner. So it's at 71 now. So right now I could lose back 139 on my runner. And quickly, what did we lock in? We locked in 178. We locked in 178. I don't want to lose back 139 on the day, okay, against that trade. So I would move my stop up to cut my risk in half, my potential loss against my gains. Now, testing this strategy, I moved it to break even every time. I'm going to leave it at that $1.50. So that's where I would have it according to this strategy. So great move up. It has not closed past level 2 right yet. So once it closes past level 2, that's just the rule of thumb I did with my stop. The first thing was to move my stop to break even. Okay, when it hit PT1, close out 2 contracts. I didn't have to do that. I didn't have to close out 2 contracts because I put a sell limit. Make it mechanical, make it happen, take it out of your hands, take it out of your emotional control is what you want to do. And that's what you do by putting the sell limit orders. So what we're waiting on now is a candle to close above, and I can't really see the line. There it is. I am going to put a line on this just because my executions there, so I can't really see the line. So that's our line. So I need a candle to close above that, okay? Yeah, we're still having a lot of volume. What was it on this one? Yeah, 25. So this has been our biggest volume candle right now. And right now we're still at 13. So we're still over that 10. Okay. So right now what I'm waiting on, again, according to the rules, was to get in when a candle closes above the box or below the box. Use the middle of the box for the stop. When the stop goes to PT1, close out 2 contracts, move your stop to break even, and I'm done. Basically, it's that you get what you get and you don't throw a fit. If it comes back, stops me out 0, I miss out on locking in any of this 200. If a candle closes above, what do we got? We got 50 seconds left. So if this candle closes above PT2, I'll move my stop to up here to the first take profit level. Now, you could be aggressive and do that right now. There's nothing that says you can't. It is up above level 2. So if I wanted to, I see that we're up, 206. I could lock in part of that, 85 of that by moving it there. And that's okay because it has breached that level. But I just know that it could pull back and stop me out if we do that. So there's our close above PT2. So we move our stop to PT1. We got about 15 minutes of taking new trades, so we don't have to do that. So far today, where are we at? I keep hitting the wrong button. So far today, we had a $203 trade. We had a $178 trade. And we have a runner on that is positive 85. So what do we got? 378 and 85. So 450 on the day. So we have 450 right now with where the stop is. And then, so that's not bad. Total on the day, 450. Again, most people are looking for that. Again, I always equate this to a day. If you went out and worked for a day, 8 hours, and you made $20 an hour, you're making $160 a day. The only reason I use $20 an hour is because from my construction background, a lot of the guys that I use on my house flips, that's what they're making, about $20, $25 a day. And normally the lead carpenter's making $25 and the others are making $20 now. Just if they barely know how to swing a hammer, they can make $20 an hour. So on an 8-hour day, they're making $160. So as I always look at trading, I look at how can someone come in? Can they come in and just make that, $200 a day? Make more than what they do at work. And of course, we've done that today. We haven't the other days as we took losses or profit to make up for losses. So far on the week, if you look at the realized profit down there at the bottom, it's at 320. We would have a little bit more locked in if I wouldn't have done this right here. This negative 64 was yesterday. We were up and 2 contracts closed for 190. And instead of pulling my stop to break even and sticking to the rules, because if I would have, when this profited and closed 2 off the limit order, when it pulled up to the next level, or when it did that, if I pulled to break even, I would have lost nothing here on the runner. But instead, I said yesterday, I'm going to leave it. We'll give it a little more room, and I got stopped out. So that's my fault. We lost back the 64. That's not according to the strategy. So the way the strategy was tested again, your limit orders get closed to close out 2. You move your stop to break even. That's the way it was tested. That's the way I started trading it this week. However, yesterday I was like, let's just leave it because we had FOMC. You had the Fed funds rate in the afternoon. So I thought, well, let me give it a little bit of room in case it continues to push down. and pops down for during the news. Well, that didn't happen. It pulled up and stopped me out. So that's my fault for that. So the data is kind of skewed in that aspect. So we have to remember that 64 would have been added to the 320. So we would almost be up 400 for the week, which isn't that great because we're in day 4. Okay, so that's only $100 a day is the way I look at it. So right now, we've only locked in $100 a day for the week. And not the greatest. That's $400 in the week. So we would hope tomorrow we would have the same type of day we had today. So tomorrow, if we have the same type of day today, if we can get up to that $1,000 mark on the week, then that's $200 a day. So what I'm looking for in testing this strategy is, again, can the working man or woman come in, the working person, the person that's out there working every day, can they come in and trade this strategy while they're working and just make that daily wage that they make, which again, 8 hours a day, $20 an hour, that's only $160 a day is what we're looking for. So if, around $800. So if we profit $800 or more, then for this week, then that person could have made $800 for the week or $1,000 for the week in 2 hours. Typically, we only have one day we had to go to a redemption trade if you wanted. So far we haven't had to do that. Haven't had to take a redemption trade. So far this has been okay for that, just trading 2 hours a day from 10 to noon. Now, someone at their job, I mention this each time, someone at their job cannot, I have my stop here. I want to make sure my stop was moved up there to level 1. So someone at their job can't sit there for 2 hours, unless they have access to a computer and they can kind of monitor stuff while they're working. So again, what you would have to do is take that coffee break or bathroom break and at 10 o'clock come in and mark the high and a low with an alert. All right. You'd come in here at the low, and again, you're going to come in and create an alert. Where'd my box go? Oh, it's down there. It pops on. You would add an alert line there, okay, on the low so that you're alerted when price crosses that level. And then you would create a line up here on the high, and then you'd walk away. So again, you go get coffee, go to the bathroom, you set and your alert lines at 10 o'clock and wait for price to close past those lines. Price closes past the line, you go take the trade. You put your stop where you put your stop, you put your limit order where the target is, and now you walk away. You go back. Your phone's going to alert you that either your stop was executed, okay, or your buy limit orders were executed. If you're, and what you want to do is reset your alarm line. So if it comes back and stops you out like I almost was here, well, the alarm was already triggered. We traded it. It stopped us out. I'd come back, open up my phone, and reset this alarm line down here to go off again if it closes past that line. Close past the line, you take another trade, set your profit target, set your stop, walk away. It's another coffee break is what it is. Your alarm goes off, okay? And then when it hits take profit, you get an alert on your phone. You see that your limit order was triggered. You, unfortunately, you got to take another coffee break or restroom break. Or if you can just open up your phone briefly, you open it up, move your stop, and you walk away. Later, you're going to be triggered another alert here when you get stopped out. Okay, here, when you get stopped out on your runner. And that's okay. Then what you're going to do is, as it pulls up in here, reset your alarm for a short. You already have your alarm set for a long. You get triggered on a long later. But you're in here working. You're doing your thing over here while this is going up. And then you get another alert when it crosses above. You can do that. So that's kind of what I'm looking at. Can someone that has to work all day come in, and is this strategy worth them taking the time to take those extra coffee breaks, restroom breaks, whatever, and trade this. Can they make money while they're working? And we know you can make money on the side trading while you're working if you have to work. So that's not the point. The point is, can they sit there and do this and only fuss with it for 2 hours? Only have to mess with this for 2 hours and then be done. So before noon. So we're already up for the day. So I was glad this turned in. It started off really slow over here with this bearish, continuation, just big back and forth swings. Still profited. This one took off for us, so grateful for that, because we had even more volume step in, okay, on this candle. So, yeah, we're still over 15, 12. So we've had decent volume on all these. I look for 10 and above that I consider decent volume. So right now you see how low volume is. Eventually we're going to see this pop. We're going to see volume step back in. So what we're waiting for is, I'm waiting for it to go to level 3. And I want to see a candle close past level 3. And you have to decide, guys. I looked at the spreadsheet. Where's that at? So looking at the spreadsheet, again, if you look at Nasdaq and we sort Nasdaq out, was it 10 days? So 10 days in here, Nasdaq hit at least PT2, closed past it. So when I pick these and mark these and pick PT2, that means it closed past PT2. We moved our stop, what? One level back. That's what we do. Closes past profit level, we move one level back. So your stop would be at PT1 like ours is now. So you're looking at 10 days of where prices closed past PT2 and beyond, okay, where you're gaining more money. So these 10 days, we're making extra money by leaving a runner. That's what we're looking at, is the runners working out. So as we look at all this data, we're looking at what? 1, 2, 3, 4, 5, 6, 7. You have 7 days where it hit PT1 and we moved our stop to break even. So for 7 days, we were able to close 2 contracts at PT1 and the runners closed at break even. So we're looking specifically on this data, which has given us multiple things to look at. On these 10 days, the runners are making more money. Well, not when on the 2s. On the 2s, because when it closes past level 2, we move our stop to level 1, which is where we close partial anyways. So, but we still make more on the runner. Down here where it has PT1, we're making 0 on the runner. Where it says PT2, we're closing the runner where we closed partial. 3 and above, we're making extra on the runners. So that's what we're looking at by sorting that data up there. Okay. And I'm going to switch back to charts in a minute because I need to get back out there. But on S&P, it's around the same data we're getting. 7 trades down here, it looks like, or 6. So 1 extra day PT2 and above, but several times it got to level 4. Okay. Which is a candle closed above level 4. So that's how you want to look. And let me go back to this one at the data. Now I'm not on the way I back tested this was to this strategy's okay, Alan. I like the buy and sell signals off the power trade indicator. If you look, if you're looking at the first 15 minutes, I guess I need to slide that over here. My head's in the way. So if you look at the first 15 minutes here of the stock market and trade the break of that, the close below that, that person that's only waiting for the first 15 minutes is in here. If you're looking at the power trade indicator signal, we would actually get in here. Okay, so we're in on the sell there. That's a better price. That's more profit. So, you know, closing partial on the way down always. So you always want to close out partial on an extension and then enter on a pullback. Close out partial on extension, enter on a pullback. We didn't get a sell signal here. So we had a sell signal here, sell signal here. Those would have been your entries. Enter short, close on the extension, and then come back and enter short here again. Now what I like to do is, here's it overall. What I like to do is, you know, I'm putting on 10, and then as it goes down, I'm closing on some on the extension. It's closing 8. Leave 2 on, 2 runners, and then on this sell, we're putting on 10 again, closing out 8, leaving 2 runners. You have 4 runners on. So down in here, the first 2 runners here are up quite a bit. So that's why, and it just didn't keep with that structure. It pulled back and just, then it would have stopped out because you're moving your stop, of course. So as far as the difference, what we're entering on, and that's something to really keep in mind with this strategy. With this strategy, a lot of traders are taking that like we did here, like I took it according to the rules of what I found and seen. And then there's, of course, variations of that. What I found and seen was taking a sell signal when it comes, and the sell signal is going to come when a candle closes below the low. Okay? Well, to me, that's why I said this kind of goes against a lot of my trading, because what am I getting in on? By getting in on that close of that candle, I'm getting in on an extension. We've had a push down. I'm getting in on that extended move down. What do you expect after an extended move? You expect a pullback. So same thing here. We're getting in on an extension. We expect that there could possibly be a pullback, and you got the pullback. So this kind of goes against how I was taught to trade. I was taught to wait for the pullback. You know, you get a push down, you wait for a pullback. You get a push down, you wait for a pullback. Okay? And along with that, then I always draw counter trend lines, retracement lines. So we draw a retracement line from like here to here, and we look for that level to break to do that sell. So that would actually be our retracement line up. And you could draw a more aggressive one on here, but that's our main retracement line up. We got a sell signal. You would sell off on the next one of these 2 candles that broke that line. And we still could have sat in the pullback. It did pull back here a little bit, but ultimately it went to profit. So that's why I said I end up with a ton of lines on my chart. I'm going to pull these off. But so for me, it's a little different because it does go against how I was taught to trade. Because if we have bearish structure, it's pushing down, it's pushing down, it's pushing down, then I want to buy on the pullbacks. Okay? The same as if it's going up. If it's going up, if we have bullish structure and it's going up, we want to buy on the pullbacks. That's where you hear people say buy on the dips, right? It's going up. We have structure going up. It's making higher highs, higher lows. Each time we want to buy here. We want to buy on the dip. We want to sell on the extension. Partial. I never close out the whole trade. I don't like closing a winning trade. Let's get that straight. I do not. I have never closed out a full trade. I don't do it. I leave my runners on the chance that it keeps going and going and going. I'm taking a chance. I'm putting up, leaving a couple runners on just in case it keeps going, just in case this bullish structure keeps going. So I would have put on 10 back here on the dip, closed 8. Now, I could have closed 8 and it kept going. That's okay. I just missed out on a little extra profit by closing my 8 early, but I don't know how high it's going to go. And then again, it comes back down, and I'm going to buy again. I'm going to buy with 10 again. Maybe it comes all the way down to test this high. I'm going to buy 10 again. It extends. We close 8. Comes back. We buy 10 again. Extends, close 8. Well, by this time, I have 1 trade where I've got 2 runners on. 2 trades, I got 2 runners on. 3 trades, I got 2 runners on. So I have 6 runners. for that. And that's how some days it ends, not on Nasdaq. That's like gold, oil, gold, oil, Bitcoin, platinum some days, to where you're going to get those runners where it keeps going, and you'll end up with multiple runners. We've got there's several people in the Discord that are doing really good with that, and I know a couple are posting charts in there. So grateful for that, where they're watching the swings. That's what we're doing. You're watching the market moves. So got to pull back. Basically, we're waiting on level 3 to hit. I know we're at 12. I'll go a little bit past. But I would come in here, level 3. So this is me getting ready to, walk away and do other things. I'm going to come up here, and I want to put an alarm right there. That's at level 3. And I want to know when price hits that level. So when price closes past level 3, then I would move my stop up to level 2. I'm trailing one level back. That's the rules that's what I saw most often on those runners. So again, as you look at, as we looked at Nasdaq, what am I looking at here? I don't think that's the right. I need to clear some of those out over there. So again, as we look at Nasdaq, we're looking at here, 4 days. What are we looking at? So this is line 18. So that's 17 days. So 4, 5, 6. So we look at several days. We hit profit target 1, and we would have moved our stop to break even. So on these days that say PT1 on ES, we would have broke even on the runner. Level 2, we would have had our stop at level 1. So we'd have made the same amount on our runner as we did on our closing partial when it gets to level 3. And that's why level 3 and above are green, because level 3 starts off that we're actually making more money on our runner. When price closes above, we're waiting on candle to close above level 3, we'd have our stop to level 2. So we're actually making more on our runner than we did on closing partial on each contract. Okay, so we want to be aware of level 3 and above. Level 4 is great. The fact that it 4 days out of those 6 where it hit 3 and above that I've marked green, those 4 days we hit level 4, which means my runners got stopped out at level 3. So the runners made more money. They got stopped out at level 3 versus, down here at level 2 or 1. So more profit on that. So, John, there's two ways. So a conservative trader on the power trade indicator is going to wait. And we're still drawing trend lines. We're looking at highs and lows. So a conservative trader is going to wait for them to line up. A more aggressive trader is going to look at the moves and know that when you have and I don't have it on, I'll turn it on. I have mine shut off, as a lot of times I'm on a lower time frame trading, so not to be aware of it. But when the two lines line up green, the first one and second one, we know we're in for a deeper retracement. Okay. Yeah, you can on the stop. I'll go over that. So again, when the first row, second row line up, because again, it's monitoring 3 time frames up above us, 3 higher time frames. So when these two line up here, you would normally, if you got it set on the 15, the 1 hour and 4 hour, then when these two line up, when this middle one turns green, it would be telling you that the 1 hour is reversed, which means a deeper retracement. Now I've got mine set, since we're day trading, actually it is. It's set on the 15, the 1 hour, and the 4. So the power trader indicator is monitoring higher time frames. the 15-minute, 60, and the 4-hour. When all three of them line up, which means we have the 15-minute, the 1-hour, and the 4-hour all in sync, short, we get a sell. Okay? All in sync. After after this one turns green, you'll see there just for a minute it turned green on the pullback. We got another sell signal. They all three line back up. Okay? When two of them, the first two, change and are in sync, that means we're in a pullback. It may go deeper. Now I've got that setting shut off right here. It's the 1-hour reversal, and there it is here. So that 1-hour reverse came. I'd love to have seen it over here. It just didn't come that. But it's saying that, hey, the 15-minute, it's pretty much seen here. When you see the 1-hour reverse, it's pretty much there. It's a bigger symbol. That's kind of to slap you in the face and say, hey, buddy, look, I know the 15-minute has been green for a while. Look down there. You know, it comes up. Again, that's kind of slap you in the face. Say, hey, buddy, look, I don't know if you're aware, but on the smaller time frame, the 15-minute, we've been green for a while. And I just switched over. I'm the 1-hour is what it's saying. I just switched over to green as well. You might want to consider reversing your position, closing out your short and getting in long. Just be ready for it. And you have to decide. Some people, sometimes I've taken that as a signal to reverse and go long. Okay. And if you notice, that actually came right at this candle, that where it broke out the high, right at that candle where it broke through the down trend line. And that's right at the candle where we actually got in on. Okay. That 1-hour reversal. So that's what that does. I just had mine shut off because a lot of times I'm on a lower time frame, and I actually have taken these down here where I've adjusted it to a 5, a 15, and a 1-hour. That's more when I consider it still to be scalp trading, because I'm only going to hold them for a few hours. Okay, it's a more aggressive strategy. So, but that would have been where it told us to. It would have said, hey, again, when that comes up, it's kind of to smack him in the face again and say, hey, you know, I don't know if you've noticed. But price has been coming up. The 15 minutes already green. And I don't know if you noticed that, but I just wanted to make you aware. And by the way, I'm going green as well, along with that. So you might want to consider closing your short and entering a long position, but just be ready overall. So for me, it did come when we bought, because we bought the breakout of the box. Okay. So we would have been in on that a little early. But that's how that works. Sometimes it comes after, the move has to move quite a bit for the 1-hour to turn. And that's what we saw. We saw a big move up, and that big move up actually turned the 1-hour time frame green. That's what it took. It took all those candles for that to turn. Sometimes it doesn't take that many candles, and we don't miss that much of the move. If you're also looking at traditional high-low breaks, again, over here we're in bearish formation, printing lower lows, lower highs, lower high, lower low, lower high, lower low. And then when it come up here, it failed to make a lower high. It actually broke this high. So when it broke this high, we know that what? This bearish formation that was here is over. And we're seeing a deep pullback. But we have to be careful, because it could just be a deep pullback and turn and push off this downward move right here. Because if you're on a higher time frame, that's just one big downward move on, say, like a 15-minute or a 1-hour. And then you have to just kind of be careful where we're at. That's where we bought. So, and you can, if you're using high lows, someone mentioned that about using the current low as a stop. You can. So here's our current low right here. So we could be aggressive, move our stop up some. I'll just set it at the middle of my 4-hour zone. So again, kind of cheating it a little bit, because I do have a 4-hour zone there, right? So it popped through the 4-hour zone on all this volume, came back to test the top of the 4-hour zone, So far, it looks like that's held up. But what we need ultimately to know if that's going to hold up long term is this right here. We have to have a break of this high. If it can push up past that high, as soon as price pushes up, we don't have to wait for a candle to close, but as soon as price pushes up above that high, we know that what? It's on the way to making that new high. It technically already has because it's pushed up, if it breaks that line. That's what we want to see. You know, for now, our bullish structure that we're finally building as it's pulled back some, we would want to see it push high. So we would want to be aware of our high. We'd want to be aware of our low. Always. Yeah. So be aware of your high and low. That's our high to break. This is our low to break. If it comes back and breaks the low, what does that mean? Well, if it comes back and breaks the low, if it fails to break this high, comes back and breaks this low, well, then that is a lower high, lower low, once it breaches that line, and that is bearish structure. So the bullish move may be over. So I'd have to consider closing my short. Well, if you have your stop loss there, it's going to close out for you. The indicators, it's the power trade indicator, is what it is. And it has alerts too. I've got them shut off right now, but there's alerts on it where you can set it up that on like the buy signals. I've got it set on a 3-minute chart. So you can set that on whatever chart you want. And I've got it right now, the way you've got it, you can create a list and have it monitor just NQ, or I can have it monitor the whole list, my whole red list. So you'd create your list of whatever. It could be Bitcoin, gold, oil. You could throw 5 or 6 things in there in your red list. And then when that alert goes off, that you'll get signaled on that. And I do always bar close. Wait for a bar close, because sometimes as this like red bar is forming, you can't even see that one. But sometimes as like the green bar is forming going up, you'll get, as it moves up, you'll get the buy signal pop up there, but then if it pulls back down, it'll disappear. So you always have to wait for a bar close. You won't find it on, I don't know if you can actually go out and find that listed on TradingView or not. So it's for the premium subscribers on that. So far good trade on that as well. Not the best, because you would have waited on the green candle. But yeah, you can always tweak the system if you want to call it that. So again, the way I back tested this was just move your stop 1 level back. That's what I said to myself I was going to commit to give it a true back test for someone that's trading like while they're working. They're not monitoring the charts. So as of right now, they got an alert that price closed above level 2, move their stop here to level 1, and set an alarm on level 3 like I did here. So that trader, is working right now, and they're not going to get another alert unless it closes. Okay, well, they already know that they snuck off to get another cup of coffee, and if they get a signal on their phone that says order executed, they're going to know it's this. I only have one order on, right? I only have a stop on there, and I know that, and I have an alarm. So I'm going back to work, and then I'm going to get 1 or 2 of these alerts by 4 o'clock. And if not, I close out at 4. So either I'm going to get an alert that says order executed, in which case that means it's closed and I profited some, okay? Or I'm going to get an alert that says, that this level's hit. The profit level 3's hit. And of course, then if you get that alert, then you want to pull your phone back out, log in. If you have to, take a coffee break or whatever, duck under the desk, head out to your car. I don't know what you're doing for work, but you would pop out on that alarm, because you know on that alarm, if that's triggered, if I walk away right now with that alarm level there, I know that if that alarm goes off, if I get that message, I need to open up my charting and just do this. Slide my stop up here. That's all I got to do. And then I would set an alarm level at level 4 and do the same thing. Then close it down. So we don't have to watch it the rest of the day. So again, we're looking at this strategy as someone just coming at 10 o'clock, marking the high-low, waiting on a candle to close above or below. So we've had 2 good trades today. It started off rocky for both traders, waiting on that 15-minute, the close below the first 15 minutes. There, taking it here, the close below the first half hour. And again, this really does go against how I was taught, because I was taught on the way down or on the way up to buy on the pullbacks. Okay? So to always buy on the pullback. You're getting in at a better price. So we had a pullback here, and you would sell and take profit on the extension. Now here's the way I was taught was, again, trend lines, right? So we have trend lines here. We have an aggressive trend line drawn from there to there. I will show you this. Trend line from here to here. Again, on a pullback, you would draw a retracement line and sell when it's broken. So there's your retracement line. You sell here where it's broken. Okay? And then it moves down. You get a pullback. When you get a pullback, you start marking those candles. So again, you see upward movement here. You see wicks that you can draw a retracement line on. It retraces back. Then you want to sell when it breaks the retracement line. Okay? Well, sometimes you're getting in a little later. Over here, if you sold when it broke the retracement line, you're selling there. Where you'd have this indicator on your chart, the 4-hour came in line there, and you would sell. So you're getting in at a little better price. But always pull. You should let it pull back. Don't enter on an extension. That's the way I was taught. And that being said, that's what we're doing by trading the breakout of the range. So again, that goes against what I traditionally was taught, and that's okay. I tested it, let me go find that video on it too. So back tested it, and put it back on that. And it worked well in the back test. So we're forward testing it now. I think this will work right here. I'm going to pop a link in here in the chat. I'll pin it to the top if I can see the bar. I got my camera right in the way. So I just popped a link in there, pinned it to the top, and that link goes to the training videos. So there's some training videos that are put in there. That's where you can see the power trade indicator. There's 2 of them in there because one was early on, how it was set up, and I wanted all the time frames down there. So at the bottom, so we changed that. So there's actually 2 videos on it. So one goes over the power trade signals indicator, and the other is like a training on how to set it up, how to use it. There's also one in there about setting up your Fibonacci tool as the profit target tool. See, I'm about to get stopped out. Did I forget to move that down? Why is my stop way up there, guys? I must have still been here and moved my mouse down on the other screen. That's not good. So again, if you're moving your stop, we want to keep it at least below this low. So yeah, we're going to lose back some. I don't like trailing it super tight. But again, there's also a video in there on this, taking the, where was our stop? the Fibonacci tool in TradingView and turning it into like a profit target tool. And that's how we would use that. So take it and you put it on your stop. It's kind of like the position tool. So TradingView has its own position tool, and it's okay. You can set it up to mark your 1 to 2, where you're targeting 2 times your risk, but that's it. If it gets to level 2, well, then you've got to adjust the settings on that to get level 3, where it'd be 3 to 1. You have to, once it hits there, you'd have to adjust the settings on it to where it would hit 4 to 1 and so on. So I messed with this back last fall and set it up, and then I just forgot all about it because I wasn't using it every day. So I was looking for something that a way to help some people identify the profit targets when they're looking for 2 to 1, 3 to 1, 4 to 1. How far has this moved already? Has it moved to 5 to 1, 6 to 1, or 7 to 1? So using that Fibonacci tool, it's got 22 levels in there to utilize. So the first one's 0, that's our stop. The second one's 0.5, which is our half stop. So if you hit 1 to 1, you can choose to move your stop up halfway. Close partial and halfway if you want. Or just move your stop halfway. Leave it all on. And then 1 is actually your price. That's where you entered. Then you have to label the rest just 2 through 22. You have to go back and forth. You can't go 1, 2, 3, 4, 5 straight down and then the other side. The way the indicator is set up, it looks to go back and forth on each of these numbers. So you set it up that way. I've colored mine all the same color as greens and reds. Extend the lines to the right if you want, or not extend them. That's up to you. I like them extended to the right while I'm in a trade. If I'm out of a trade, just want to have it marked, I'll take that off, and then I will move the right side over to encompass the whole move. Okay, but that's how to set that up. So it's real easy to do. I like using it because then here's all my profit targets. Again, all the way up to 22. Why 22? Because sometimes I get into a trade and it would only go up and hit on this tool. It would only go up and hit level 2, 3, or 4. Okay, and that's it. And I'm trailing my stop up that way. Just like we are now, we're just using this range breakout tool. And I'm trailing my stop that way. So again, this is real easy to set up something like this and be rules-based. And then you can always adapt your strategy from there. Like someone mentioned earlier, I had my stop here at the opening range breakout level 1, and they said, well, wouldn't you use the low? Traditionally, yeah, I'm going to use the low. I never go like that to the tick. I'm always going to give it a little bit of room. So we've squeaked out a little bit more profit. But what happened was I had 6 levels set up, and then price, I think it was on Bitcoin. It was Bitcoin or gold. It got to level 6 and broke it. So I had to go back into the settings, put levels 7, 8, 9, 10 in there, and then it kept going and going. And we've had a couple trades, or I have, where it's past level 22. Okay. So that video is on there on how to set that up. And let me go back out to that. Again, that's in the that link I put in there, the training videos. So that would be one you would definitely want to look at, is the ultimate. I just put ultimate TradingView profit target tool. But that's all it is. It's your Fibonacci tool to change the settings. So in that video, it's 31 minutes. It goes over how to change it. The other video also is 27. This is a good video to, I love this one. And where'd it go? This is 0 to 90K in a year. And it is conservative. So that link I just posted, I guess I can pin that to the top too. That one's 0 to 90K in a year. And it's conservative. It's looking for $200 per day. That's it. For 3 months. 3 months every day, 200 a day. Then you're going to double that. Because here's the thing. If you can make 200 a day consistently for 3 months, is that not repeatable? I mean, if you've done it for 3 months and you're making 200 a day, great. Let's see what the next 3 months hold. Well, if you've done it consistently for 3 months, 200 a day, well, let's do it for the next 3 months. But let's look for 2 trades instead of 1. Could be trading another instrument. Could be looking for just 2 trades in 1 instrument. For me, it would be looking at another instrument because we leave the runners on. So if I'm going to look for 200 a day, I'm trading 1 instrument. Okay, just looking for 200. But we leave our runner on in case it goes. Okay, if I get into gold, 10 contracts, I'll close out 8, and then I'll let my runner go to see what we get. It runs a little bit, I'll close out 1, move my stop, let it run more. So the runners are your bonus. That's your bonus check at the end of the month. So that is, like I said, 200 a day. Then you look for 2 trades. We're doing exactly the same thing. Same thing you did January, February, March. You're going to do it April, May, and June. For 3 months, but you're looking for 2 trades now. $200 per trade, but 2 trades. Do it for 3 months. The next 3 months, we're still going to stay consistent, meaning for the next 3 months, July, August, September, you're going to still look for 2 trades a day, but you're going to double your contract size. So instead of $200 for trade, okay, you're going to make $400 per trade. So you're still only looking for 2 trades a day. You're still only placing your stop loss where you place your stop loss. You're still pulling profit where you pull profit. You're still managing your runner the way you manage. You're doing your trading consistently. But because you just went through 6 months of trading that way, and for 6 months you consistently were profiting 200 a day, and then 400 a day with 2 trades, well, now you're just doing the same exact thing, make it boring, make it repeatable for the next 3 months. So again, July, August, September, you're doing 2 trades still at 400 a trade. And then guess what you're doing in October, November, December. So in October, November, December, you're still going to look for 2 trades a day. Unfortunately, for 3 more months, you're going to look for 2 trades a day still. Exactly what you just did for the last, 6 months, 2 trades a day. And the first 3, you're looking for 1. You're doing the exact same thing. Entries where your entries are, stop losses where your stop loss is, take profit where your close partial rule is, manage your stop the way you manage your stop, consistently every single day. Make it boring, make it repeatable, and then stick to it. So for the last 3 months of the year, you're doing exactly the same thing, but what are you doing? Well, we're doubling our contract size again. We're not going to look for more trades. We don't want to sit there and trade more instruments. We're just doubling our contract size again. So instead of 400 per trade, now you're getting 800 per trade. And you're just doing 2 trades a day. But you're not doing anything different in your trading. You're still entering on the same signal. You're still putting your stop loss where you always put it. You're still closing partial where your rule is to close partial, moving your stop to break even or halfway break even, whatever your rule is. And then when it moves to take profit 2 in this case, we'd move our take profit or our stop to level 1. So if this is how we were trading, we would do exactly what we're doing now today every single day. And we're not going to switch strategies over the year because we've back tested this. We know that historically, at least, Nasdaq goes to level 1 at a minimum. Sometimes it falls short. There were days where it fell short and we'd take that loser, but that's okay. I would sit here and trade all month, trade 20 days, and look for 1 trade a day making $200. And yes, I may have 5 days where I lose the 200. Is that not okay? 20 trading days in a month, and you lose on 4 or 5 of the days. Okay? So you've had 15 positive trades, 5 negative trades. You fell short of your goal, 200 a day, which is 4,000 for the month. You fell short. So you only made, what would that be? 3,500 for the month instead of 4K. Is that not okay? Would you not be okay with that? I would. So it's okay to take the losses. And that's something you have to stick to as well. So yesterday, we took a loss when we entered and it pulled back and stopped it. I almost took a loss on this first trade. Does that stop me from getting it back in? No, it can't. You can't have a fear of getting back in. You stick to your rules. You should be able to look through your charts and go back. And like I said, go back and look and go, hey, here's what, and I have to shut this off because you guys wouldn't have this on here. I don't want to hide all the indicators. We'll leave it on there because I don't want to hide those actually. But we look and we'd have a sell signal here and you would buy and it goes and closes past level 1. We would have had her stop at break even. You're stopped out at break even. No big deal. Then we go to the next day. So I've gone over that before. That's how this was back tested. You're buying in here when it breaks out the box and then it hits level, you close partial here, and you would have been stopped out here if you pulled your stop to break even, okay? If you leave your stop in the midway in the box, it went on to level 2 and closed above level 2. So that depends on, each trader is going to be a little different. But that's how you kind of want to back test. We've already done that, or I've already done that. So good trade on the day. I think I'm going to kill the stream. So as far as what it looks right now, it looks like, where's that at? Let me see. So far, it looks like S&P, has been the best, ES, so far. So I'm going to go through, I've still got, no, this has already been adjusted. I've already ran this out. So you'll see we're at May 7th here, and today's May 8th. So at the end of the day today, I will update this, okay? Originally it was this one as we were tracking the days. So this is the current one because I wanted to back test back through April and just go back as far as I could with the indicator. So I must not have went back enough. I'll have to go back and look because it says March here and that says April. So these are Saturdays. So evidently I've still got this list sorted. There we go, May 7th. So I'll be marking May 8th, checking all these off. So that'll be after 4. So 4 o'clock I'll be posting this. Today's setup here on what happened, how far they went. You'll also get the screen. This will be posted in the Discord where you'll get the Nasdaq screen with the trades on it here, and then I'll post a quad chart. So we'll have a quad chart of all 4 and what they've done. So this is the British pound, so ignore this, but this is a trade I'm in on my Forex account, is on the British pound. So that's something I got in this morning, and it's something I'm still in right now. There was news that came out at 7 a.m. on the British pound, if you're following currencies at all. So that's why that I was checking it out before we came in here. So I need to get that back on Dow. So as we look at the 4, and we'll look at them real quick, Nasdaq closed above level 2, so we moved our stop to level 1. Okay, let's see where we are here. ES, because I'm specifically now, since I've looked at that data, I'm looking specifically at the Nasdaq and ES. Those are my 2 right now that are in the top 2. Okay. It may be different, Palos. I don't remember the numbers. I don't remember offhand if it was 200 a day, then 2 trades at 200, and then 2 trades at 400 and 2 trades at 800. You'll have to go back and look, but it's got all the calculations in there. But that's what it worked out to, was it worked out to like 90K. And I hope the math's not wrong on it, but that's what it was like. It was 2 trades per day, or 1 trade per day at 200, I believe it started out, and then 2 trades at 200, and then 2 trades at 400, 2 trades at 800 is what it was. And hopefully it come out. Now you make me wonder. I'll have to go back and total back up. I don't want to have to redo the whole video. So looking at the 4, okay, because that's what we're looking at. Again, if I'm looking at that this right here spreadsheet, I'm going to be marking this at the end of the day. Okay, which one of these played out better? So far, we see that S&P, okay, went up, and we're looking at what it closes above. S&P closed above level 3, so our stop right now would be at level 2. Dow shot up there and closed above level 4, so our stop would be here at level 3. And what I like about the Dow is, of course, I have a 4-hour support and resistance level, so would love to see that hold up. The same, look, 4-hour support and resistance level on the Dow. On Nasdaq, what do we have? Well, on Nasdaq, we have, let me go back to this charting. This one, my mouse is bigger. Okay, so again, Dow went up and closed above level 4, so our stop would be at level 3. We have a 4-hour support and resistance level there as our resistance level. Okay, we want to put a line of defense, keep a line of defense between our stop and where current price is, okay, in case it wicks down or pulls down. We have a 4-hour support and resistance level. Well, surprise, surprise, if you look at Nasdaq, what do we have? Well, Nasdaq, we have a 4-hour zone, okay, which means that at some point, price either, looking at the 3-minute, you can't really tell. Other than I know this is a red zone. A red zone is at the upper zone. I only put the red zones as upper zones. Mid zones are yellow. The lower zones are green. So what that means to me is that it broke through a red zone, and since broke through that 4-hour zone, we're making that high. Are we going to see a push off that? So we'll see. But as far as the data shows, on these 4 days, because also we had Russell close above the level 3, and our stop would be at level 2. So none of these are stopped out yet. Our runner would be at level 2 on Dow. Our runner would be at level 2 on Russell. ES and Russell are stops. Stop at level 2 on S&P. Stop at level 2 on Russell. Our stop would be at level 3 right now on Dow, and our stop would be at level 1 on Nasdaq. So Nasdaq and ES, S&P, those have been the best two. So today we're seeing good results on Dow and Russell as well. So this would be something where, do you put all your eggs in one basket? As we look at that spreadsheet, okay, and I think I got to switch back to this. So as we look at this spreadsheet, do you put all your eggs in one basket and just trade Nasdaq? Or do you, if you're going to go, I'm doing 3 contracts on, closing 2 at partial, leaving 1 on. Okay, that's what I've been doing. So if I was trading 6 contracts on Nasdaq, 6 contracts on, closing 4, leaving 2 runners, and getting these same results, would it be better for me to maybe split that? Do 3 contracts on Nasdaq and 3 contracts on ES. If ES tends to break out and go to level 4 more often, I might want to consider that. I might want to consider switching to ES completely and putting all 6 contracts on, or I might want to just split it up. 3 on Nasdaq, 3 on ES, okay? So that's just something to consider. But these will be marked going forward. All that'll be posted. All that'll be posted on in the Discord out there. That's just posted out there in the ORB strategy. So this right here, the link to that, that shows where we'll have a quad chart. Where's it at? There's last night. So you'll see a quad chart. This is yesterday's chart, where they ended up, what profit levels they hit. That's between 10 o'clock and 4. At 4, we're closing charge. The Nasdaq specifically, we took a buy. It did not get to PT1. We took a sell. It got to PT1 and then came back and stopped me out. Okay? Only if you traded in the redemption period. Well, that was a profitable trade. Okay? But still, it wasn't enough. It was enough. We were still down like 95 on the trade, I believe. And I took a little big loss. Remember, I didn't pull. Yesterday's the day I decided not to move my stop to break even. So, if I would have, I'd have got stopped down on this wick, which would have been okay and just been done. So, and that chart, and then this will be posted, the trades for the day. And then that'll be posted too. So, look for that to be posted. And then as of now on our trades, so for today, we're sitting at 203 this morning on the first trade. And then the runner, we lost a little bit because I didn't pull it quite to break even. And then the second trade, we're at 178 so far. So this is the first. Oh, you're kidding me, guys. Sorry, that's off. So again, what I was talking about was not putting all your eggs in one basket. I just mentioned that you may want to trade as we look and split up and not just stick to Nasdaq because you're painting yourself in a corner. If you see that Nasdaq barely gets to past level 1 most often, and you look at that spreadsheet and say, well, ES gets to level 4, 3 or 4 often, so we're catching more on the runners, then why, again, put all your eggs in one basket and paint yourself in that corner? I want more profit. I'm sitting here for more profit. I'm sitting here for positive days. I'm sitting here for profit, not loss. It's okay if I take a loss. I'm okay taking losses. I'd be okay taking a losing day. But that's not why I'm sitting here. I'm not sitting here to take losing days, not sitting here to take losses. And so we trade with the trend. We trade with the structure. Okay. Right now we have bearish or bullish structure formed on Nasdaq. So we're trading with that. And like I said, I've seen people, I know I mentioned that to the one guy. I'm like, I tried to show him Bitcoin and gold and oil. I'm like, dude, we're trading all this stuff because Nasdaq doesn't always give us structure, rarely gives you structure. So why not trade something that gives you structure, bullish or bearish, that you can trade with? And I mentioned before where I went into the shop, the coffee shop, walked in. We were in here live, and I was short Nasdaq. It was actually Nasdaq because it's what he trades. I was short. Power trade indicator, sell signals were flying off. Sell, sell, sell. Every pullback, red candle, it would say sell. I'm in short. Walk in, I go, dude, this structure's built up. I know you trade it. I've been short all morning. I'm going to stay short until I get a buy signal on the power trade indicator. So about 15 minutes later, he comes over and says, hey, where are we at? I said, it's still moving short. Just got a sell signal. And he sits down and goes, okay, I'm buying. I'm like, what? Yeah, I'm going to buy. So he buys. It goes up. He makes $100. Closes the whole thing. Why'd you close? Well, it's just, that's where I feel. I feel that it might not go further. But I made 100. I'm only looking for 100 to trade. I said, okay, that's fine. You're only looking for 100 to trade. You accomplishment. And then he goes back to work. Well, it starts moving down again. Keeps pushing down. So the afternoon comes back, and I don't know, it was about 2 o'clock, I think. Where's it at now? I said, well, it's moved down quite a bit since you took your trade. Glad you got out because your stop would have been triggered. It's moved back quite a bit short. He looks at it and goes, man, it's moved so far short, I'm going to get in long again. I said, why? He goes, well, it's moved so far. It's just moved a lot down. So I think it's going to go up. Okay. But you're trading against everybody out there that's short on this. The structure's short. Everything. We have bearish momentum. We have bearish structure. We have lower lows and lower highs all morning long. From like 7 a.m. and it was 2. I'm going to buy anyway. So he bought. It immediately turned and went to a stop. So he lost 500. So even though he gained 100 in the morning, he lost back 500. But I realized that he's always doing that. I said, is that how you're always trading? And he goes, yeah, I look for the moves. And when it moves in one direction quite a bit, I know eventually it's going to turn. And so I just get in and grab $100. But that's why he was blowing accounts too, left and right, the prop firm accounts. So I trade with the trend. And whatever that trend may be for you, it could be moving averages. I don't care. Some people use the MACD, CCI, RSI. There's all kinds of tools out there. Some people just use, EMAs or SMAs. They use the moving averages. And that's the way they trade. Everything works. It all works to extent. You just have to learn the rules. You have to make it a rules-based trading strategy based off the indicators you use. And if you're using moving averages, that's fine. I used to use them. I started out using them as a way to trail my stop a long time ago. Okay? So you just have to stick to it. But ultimately, we're looking for that bearish and bullish structure. If it's going up, we want to see higher highs and higher lows form. We're always watching the moves, the swings. If it's going down, we're looking for lower lows and lower highs to form. We're always watching the swings. So here on Nasdaq, what do we see? Okay, we know we had a big, huge move up on Nasdaq, right? We had a big, huge move up on all. But what are we seeing right now? Well, we're seeing, if you have to, draw this. I don't have to see it. I keep forgetting you got to double tick that. But we're seeing higher highs and higher lows. A high, higher low, definitely in what we had way back there. Higher high, higher low, higher high. Bullish structure. We have bullish structure. Okay. Something else you can use. I know a lot of people don't like drawing a lot of stuff on their charts. But use the channel tool. So some people will come in and just draw a trend line like this. Trend line, trade line like that. We're looking for that to build up. So if it pulls back, we'd be looking for a bounce there. Okay, we've made a higher high. What do we want to see next? I want to see a higher low. That's what I want to see. and then give me another push past level 3 and close above it for a higher high, and so I can move my stop to level 2. Okay? If you're using the high-low swings, you could actually cheat your stop up here under this low. So that being said, we're looking at highs and lows. How do we know how high this is going to go? If this is all we have, I normally don't cover this because I don't like people getting a ton of stuff on their charts to confuse them. So I don't normally show a ton of stuff on there. So I don't think I've ever covered this. I think I've showed it before, but it's to use the channel tool. Instead of this line down here from low to low, you're actually going to take the channel tool and mark the low to low, this low to this low, okay? Using the channel tool. Right now it looks like a trend line, right? That's all it is a trend line with another side, a second side to it. Now, it's lopsided. It's not a good tool right now. How high can it go? If it goes up to the top of the channel, that'd be great. I don't think it will. I think we might see a pullback first. So that's why typically on mine, I don't use the channel tool. I would take this and I would copy it, see if I could put it back here on this candle, and if that works out for a target. Well, this move up, right? Placing the line here and here, these two lows, mirroring that, dragging it up here, attaching it to here, I see that this move up didn't touch it. Okay? Just didn't touch it. So what if I did that? If I pulled it here. So if I pull it there, it's not a true parallel line, but if I pull it down there, are we not stalling out kind of there? Now, it could break and pop, but if it starts pulling back, and I would draw a counter trend line. Every one of these moves for me, I'm drawing counter trend lines. I'm drawing a counter trend line as it goes down, and I'm marking it red. That's my retracement line, okay? When it breaks that, I expect that push up. Where's it going to go? Hopefully to this high, hopefully beyond it does. It starts pulling back. What do I do on the pullback? On the pullback. This is my system. On the pullback, I do that. I take these two wicks, or these three wicks, and I'm drawing a retracement line. That's my retracement line. That's why I said a lot of times at the end of the day when I'm trading, there is a lot of lines on the chart, and I'm trading 4 to 6 instruments. There's lines everywhere. But that's just my day. Again, retracement line down. We're looking for a bounce. We're looking for a bounce where? Look at where this thing bounced. This thing bounced right here where these candles turn, right at the inside bottom. Okay? So we get a bounce, break of the retracement line, boom, it shoots up. Where's our target? Well, you could draw a line across the top. I normally don't have that there, but that's your target. It hit target. What do we do at targets? At our targets, we close partial. So again, if I was getting in normally, it would be 10 contracts, closing 8, leaving 2 runners. On a dip back, when it breaks the retracement line, 10 more contracts. On a move past the high, or even right there, I probably would have closed out 8 here, leave 2 contracts on. On a pullback, break of the retracement line, what do? 10 more contracts. We have 2 floating from here, 2 floating from here, and 10 contracts on here. Okay? So you get in the trade. Where's your target? Well, in this case, we would have this line here. It's hit your target. What do we do at targets? We close partial. We leave 2 runners on in case it keeps going. Because now the 2 runners from our original entry and the 2 runners from here, these 2 runners are up. We have 4 runners on. Now we would have 6 runners on. What are we looking for now? If I get red candles printing, I'm going to do it all over again. It's just system-based. I'm going to sit there and do that. Now it's too early to draw this. I need to see a couple. We need to see about 3 or 4 candles in here. What happened? But if it starts going down and it crosses that retracement line, especially if it bounces right in here, what am I going to do? I'm going to buy 10 again. When it gets up to the target, which is around level 3, what am I going to do? I'm going to close 8, leave 2 on. We'd have 2, 4, 6, 8 runners on for the rest of the day. Okay? So right now with this strategy, I'm just waiting for it to get, and I know, guys, this ends up with a ton of lines on the chart. Don't get me wrong. It can get confusing. You'd have to get used to doing that. But it's something to pay attention to. We're paying attention to basically the swings. Creates a high, pulls back. It dips. Buy on the dips. Sell on the extensions. Buy on the dips. Sell on the extensions. Okay? That's what you want to do. I'm looking to, as it pulls back, buy on the dips. Okay? So that's what I'd be looking to do on this next push if we get a push down. So as of right now, it's pulled up toward level 3. We have a higher high. If it dips back to this area, I'm going to squeak out a little extra profit and lock it in. So if it squeaks back to that level and we're looking for that bounce, now it could come all the way back down to level 2 and bounce at the inside bottom. Keep that in mind. It doesn't have to bounce on my line. The market has no clue where my line is. And it's not going to follow my line and my target. It'd be great if it did. But it may not do that, right? So that being said, could you not see it dipping down here to where level 2 is, that inside bottom? And testing that. If it pulls down there to that inside bottom and turns, what has it done? It's created a higher low. So that being said, I could squeak out some profit, and I'm going to do it. I'm going to pull my stop up there, keeping it below this swing low. Okay, so now we can lock in 158 on the day plus whatever else we got. The 203, 170. So we're looking at 3, 5. So about 520, 530, somewhere in there, 520 to 540 on the day. So we're sitting okay on the week. Again, 320. Like to see more. I'd like to have gotten to 1K or 800 at a minimum because I'm looking for that 160 a day. Now, how could I have gotten more than 320 this week? I would have had to been trading more contracts or trading 2 instruments. So if I would have been trading 6 instruments this week, doing the exact same thing, 6 on, close 4 off, leave 2 runners on, well, we would be at 640 right now by just doing 6 contracts, which 6 contracts to me is still modest as far as trading this because we are on micro. Okay, so I'm normally at 10 on a decent trade is where I'm at. So if I did 10 contracts on this and closed out, I typically am 10 on, close out 8 and only leave 2 go. Of course, I would have already hit that goal, my goal for the week on this. So, all right, I hope you guys enjoyed. We'll be back tomorrow. So I'll post everything on the Discord after 4 o'clock. And then, yeah, I've got to scoot here in about half an hour. I'll post everything. Let me see what you said here. Waiting for the test as a retracement line. You can wait for the test. You just don't always get it. If you notice on these breaks of these retracement lines, we didn't get a pullback test on none of these. So you have to decide that yourself. What you can do is, let's say I'm waiting on that to break the retracement line. I don't want to miss it if it just breaks and runs. And I would normally put 10 on, okay? Then don't put 10 on. If you normally wait for it to pull back to test the backside of the retracement line on each of these, and that's what you're doing, then before you'd put 10 on, let's say, then don't put 10 on this when it breaks. Then you would want to put less. It's okay to put 4 contracts on, okay, just in case it breaks and runs without you. You don't want to miss it. So if you want involved in it, you want to make some money, and if it's going to break and just go, 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 well, you don't want to miss that. And you don't want to jump on a moving train. So you don't want to the candle to form and close. You don't do anything. You're waiting on a pullback, and then it just pushes. And then you're trying to scramble, and you're jumping on. And you're getting in on this move up here, and before you know it, you got into way too late on the move. So what I would do is, if you're waiting on that pullback, retracement, then just put on less contracts. So you would put on, whatever. You'd put on 4 contracts, let's say, and then if it pulls back, then you could add the other 6 in. Once you get that test, that pullback, add the 6 in. It would be okay. That's how I would do it. And I've done that a lot, where I put on what I call my backup order or backup trade, where it's broke. I'd like to see it pull back and dip to give me a better price to get in, to buy in. However, I know it may not happen. I'll put 4 contracts on. That's my safety trade. That's on there so I don't miss the move if that's what it's going to do. And we had that happen here, and we had it happen here, where again, you would go lightly. Go in with 4. You're waiting for it to pull back to get you that better price. It just doesn't happen. It goes without you, but you're not scrambling to get in and making a bad decision in here and jumping in. Because if you don't get in there, you start seeing this red candle push, and you're like, oh, sweet. I didn't take the buy there. This is sweet. It's pulled down, so it's going to go back and test that line. I'll wait. I'm going to wait for it to go down. Well, then it closes, and you're like, I still don't want to buy. I'll wait. Surely it's going to push down there. It has to, right? It has to push down. Well, no, it doesn't, and surely it may not. So you're waiting on that red candle that never comes. So you didn't buy because you're like, okay, we had selling pressure. I think it's going to push down. You're saying stuff like, I think it is. It should move down, stuff like that. Instead of going off what it's doing, then you don't get in, and then boom, there's your big candle. Well, now you're like, ooh, it's going to rocket. It's going to take off. And then you're getting in there maybe, or getting in here maybe, and the move's over here. And then we get a bigger pullback. So you could have had an entry here lightly. You could have entered here with 4 contracts. Then if it pulled back, you put on the other 6. And then, so it hits up here, the top of the line, the top line, and you're closing out on 4 of the contracts are getting closed here. Let's say 3 of the 4 are getting closed here. You entered 6 here. 5 of the 6 are getting closed out at more profit, right? And you have 2 runners on. So, yeah, I do look for the pullback and test, but if we don't get them, I'm okay with that. But right now we're looking at structure. We're looking at it has bounced. It has bounced. We're getting the pullback. I'm looking for it to bounce. It wouldn't surprise me if it hits this inside bottom, okay, which is right at PT2. So don't let that surprise you if that's what we get. So again, we're looking, we're seeing, we're identifying, and I would love to see it come and bounce here on this line and then pop through the retracement line and get in on another trade, closing partial up here at PT3. We close at extensions and hitting this top line too. We're seeing a lot of, we're over 10 here on our volume, and that just dropped in half. So we saw strong, decent volume here on the pullback. So we might get a further push down. So it's just not going to surprise me if it pulls to level 2. I would almost love to see it pull to level 2. So I'm okay. It'd be better if it bounces here and breaks this retracement line. But if it pulls to level 2, I'm okay with it, because that's not the low. That's the inside of that. All right. So hope you guys enjoyed. Tomorrow we'll polish off the week. We'll see where we're at overall. I'll look for me to post out, like I said, the quad charts and all the other data out there. What am I looking for? All the reset. So that's where we are overall. Nasdaq, so decent today. Both traders traded in the negative, whether you took the first 15 minute, the break of that, closed past it, or where I got in. It was nothing but negative for both traders. Getting in, nothing but negative. Getting in, nothing but negative. Why is that? That's because we're getting in on extensions. We're getting in on extensions. It's not, you're not getting in as good of a price as if you wait for it to pull back and you're buying when it pulls back. Okay, you're buying when it pulls back, or in our case, selling. We'd sell as it pulls back. We'd sell when it pulls back and gets a sell signal. So we got in here. The power trade indicator actually signaled here, which was more profit. So both traders getting in on the price break above the first half hour low, or the power trader getting in here at the close of this candle when the sell signal came, which this person got a little more profit. Getting in on this candle here, that person got more profit than I did. Okay, waiting on that. And again, what we're getting in on is the pullback, the turn, and the signal candle, and you get a sell. This was a huge pullback. We didn't get a turn. We didn't get a sell signal. Now, traditionally, without like this power trade indicator on there, I'm pulling a retracement line and waiting for it to break the retracement line and getting in on a red candle. That didn't happen either. That's just traditional chart technique trading. All right, so I'm going to call it and stop the live. Hope you enjoyed. We'll be back. We'll see where we're at the end of the week. Right now we're up 320. I am going to include that. I got to look, the $64 or whatever it was, because that was me not moving my stop to break even. So the rules I set up was that for this was that I move my stop when it hits PT1, like here, I move my stop to break even where I entered. Okay? And like today, that's what I did. PT1, moved my stop to break even, got stopped out, got zero loss. That was the rules I set up. However, yesterday, I forgot those rules because that's not me. Me, when I traditionally trade, I'll have my stop loss above a high, enter here on the sell signal, have my stop loss above the high up here, and then when it goes down and I close partial, I move my stop down halfway between my entry price and where it originally was. Ultimately, I want to try and keep it above that high still. So for me, I'm using that half mark on the Fibonacci tool. And that's what I did yesterday, mistakenly. Because again, that's what I do. So I'm so used to doing that. That's what I did yesterday. And that's where that $64, that was the runner that got stopped out because I did not move to break even. So I want to include that in the profit to give us an accurate amount for the end of the week. So that's 64. So we're at 384 on the week. So still not good. We'll have to see where we're at on this runner, and we'll have to see where we're at tomorrow. So anyways, I'm going to kill the stream, and I will talk to you later. Safe trading. Try not to overtrade.